live. Cool beans. Well, alrighty then. I'm gonna mute you up. You got any questions? Just unmute yourself and ask away. You got it. All right. Come on. Mute. There we go. And there we go. All right. Live. And we are ready to roll. Wait a minute. Got to get YouTube down here rolling. There we go. Stop recording there. Good to go. Okay, who do we have tonight? Tonight. Here we go. Who do we got? PDS. Starseed. What was that one? Starseed me. Okay. Hot Water Beach. Good. Scotty. What's going on there, Scotty? Wool. Broken English. Back again. How you doing, Scotty Imp? Mira. Lloyd. Brady. What's going on? Richard. Good evening. Okay. David D. Fox. Good evening. T-Bro. Bull in China Shop. Cool. Joey Day. What's going on? Mike in Love. What's happening? Trent. Shan. David D. What's going on, David D? Mikey, what's going on? Greg, good evening. Golden Law, back again, I see. Nice. Matthew, how you doing? Wolst, how you doing? Let's do this here. Let's do that there. That, come on. That there, and this over here. Beto, what's going on? Matthew, Dynasty. Alrighty. We seem to be all set and ready to go. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. Now, I use nothing but pre-qualified dividend stocks, and those are companies that are consistently profitable for at least 2 decades. That's 20 years. Kate, good evening. Christina, good evening. All right, Cole's first on the list today with APLD. All right, well, let's take a look at APLD for Mr. Cole and see what it says. Now, I have a simple 1-2 recipe. You know, I do this, I do that, and I do that. APLD for Mr. Cole. Nope. Sorry, dude. See that? $5 a couple of weeks ago. We shot up to 15. Now the profit taking is taking place. She's starting to come down. Sorry, just the way it is. Stocks go up, stocks go down. APLD, 2 days to the downside. Today's yet lower than yesterday. Monday's lower than Friday's high, so coming down. Sorry, Cole, is what it is, brother. Okay, ISO, Vlad the Dad. Mark, going on. The alt girl. Okay, John, how you doing? All right, so that's it for that one. Let's take a look at some of the stocks you guys asked me to take a look at yesterday. So now, every week we are going to choose 5 stocks and see how they perform using this strategy. So this week, Dave wants to take a look at Intel. INTC, love Intel. Ooh, look at that. High, low, where was it? Where is it? Look at the motion. Up, down, sideways. Here we are, 2207. The 22s are going for 55. That's more than 2%. Now we have a one minor issue. Okay, you ready for the minor issue? Here it is. Today's Tuesday, which means tomorrow's Wednesday. So we just lost 2 days of this week's time value. So if you're going to do a weekly covered call or weekly options, the most value you're going to get is Monday morning to Friday afternoon. Well, that's 5 days. Monday's gone, that's 20% down the drain. Tuesday's gone, that's 40% down the drain. So we have 60% of the optimal amount that we could capture for the week. That's it, 60%. So if the numbers don't look good for this week, maybe we'll look at the numbers for next week and have to do not this week's options, but next week's options, just because it's a numbers game. Where's the best place for me to put my money now to get a return, a safe, predictable return between now and Friday's expiration? Okay, so Intel. A year ago, we're at 31. We jumped up to 37, dropped all the way down to the bottom, just a little bit below 18. So from 37 to 18, that's a 50% drop from the high to the low. Okay, are you okay with that? Now that's a big question, because a lot of people panic when a stock goes down 5, 10, 15, 20%. Well, what happens when it drops 50%? Are you going to panic? Are you going to sell? Are you going to bail, tuck your tail between your legs and run? Sorry, there's no safe space here. An investment is an investment. You take your money and you put it on the line. You are saying, I believe in this company and this is where my money is. So Intel, I like the company, but you can't argue with the numbers. 37 is the high, 18 is the low. That's a 50% difference between the two. So where are we now? We're at 2208. Does it make sense to jump into this one this week? Well, the numbers look good. So let's take a quick look. A year ago, we were at 30.90. Let's call it 31. Okay, we topped out at 37.31. The low of the year was on the 8th of April. The 8th of April is the low of the year, and that is 1767. That's below 18. That's more than a 50% drop. Okay, what's the last 30 days look like? And does it look like this is a good opportunity coming up? Well, check it out. 30 days ago, we're right at 21.5. We shoot up to 23. That's the high of the 30-day period. From there, she drops down just below 19.5. That's our bottom. That was 2 weeks ago. Well, yeah, last week, a whole week to the upside. Monday was higher. Today's higher. Had a nice move today. Now, here's the issue that I'm having with what we're looking at. You got your bottom down here, 17. You got top up here at 22.5. Well, the distance between the bottom and the top, well, that's right around 4. Is that $4? Yeah, right around $4. So $4 on an $18 stock. Okay, that's almost, what is that, 23, 24%? That's a big jump from here to here. Now, even though I like Intel, you get a 20, well, it's more than 20% from here to here. Do you think it can go up, or are you just like, I'm going to wait? Well, me, I'm debating, So let's pull back a little bit, take a look at a deeper view. Okay. So let's go back to January. Okay, so this is this year. We're all back here to January. Okay, down, up, down, up, down, up. We see this, all this. So basically, it looks like it's going to go up. It looks that way. Now, it's not guaranteed, but it looks that way. Now, when I do my trading, I want the odds and the probabilities in my favor. Well, I like Intel because it's been around for a while. I've been in, take care of that. There we go. So you got to ask yourself a question. Number one, do you like Intel? Number two, do you like Intel at this current price? And number three, are you willing to buy it, not sell it at a loss, and just hold it and create a cash flow every single week, regardless of what the stock does? Because we've seen what the stock can do. It can fluctuate 50% in a year. So if we're jumping in now, 22, a 50% drop would bring it down to 11. Are you okay with that? Is that something you can do? Is that something you're okay with? Well, let's take a look at the numbers. Before we take a look at the numbers, let's take a look at the seasonality chart to get an idea of what this stock normally does this time of year. All right, so to do that, we got to get right here. Slide on over to the seasonality. Now, this here, if you're not familiar with the seasonality chart, all the way to the right is January 1st, all the way to the left. Wait a second. All the way to the left is January 1st, all the way to the right is December 31st. The blue line represents the movement for this year. This is what stock's doing this year right here, this blue line. The red line is 10 years worth of data. Now, I can change it to 5 years, 3 years, 20 years. But I think 20 years is too much, and I think 5 years is not enough, so I settle right around 10 years. This is 10 years worth of data. Here's the high here in January, slowly comes down to have a bottom in November, then it ends up at the end of the year going up a little bit. But that's the whole year. Well, I'm not investing for the year, I'm investing for the week. So I want to zoom in to this little blue dot here, okay, right there. That's today. So I want to see this area here. What is the stock supposedly going to do? Now, this is not guaranteed. This is just what has it done historically in this time frame. Okay, so here we are here, June 10th. Well, normally the stock goes sideways for about a week, then drop a little bit before retracing. Well, are you okay with that? Now remember, this is just historical performance. This doesn't guarantee what it's going to do. So you got a question to ask. Do I like Intel? Do I want to invest in Intel? Well, let's see what the numbers look like. Okay, so we're looking at the 22. Let's get rid of this. Back to where we started. Get rid of that. We're going to change it so that we can do a covered call on it. And we're going to take a look at the 22, which is right here. All right, now I'm going to do just one contract. So I'm going to show you exactly what I do, how I do it, walk you through the process, and then you decide, is it something that makes sense to you? Because that's the biggest question. The very biggest question, the only question I want you to, if you walk away with nothing else, answer that question. Does it make sense? It either does or it doesn't. Okay? So it doesn't really matter on the stock itself, Intel. That doesn't really matter. Does the process, does the strategy make sense? If I'm going to pick a good quality stock, a good quality company where I feel safe to invest my money into, is this going to be one of them? And does it make sense? First and foremost, let me ask you politely, okay, in case anyone, gets carried away. I answer every single question that you guys post. So if you can do me a favor, ask the question only once. And if you do ask a question once, make sure it's a complete question from beginning to end. Because I got 7 different channels going, which means I have 7 different chats going, which means there's probably anywhere between 7 to 20 different conversations happening all at the same time. Okay? So what do we have here? Tommy! It's the Dividend King. Good evening, sir. Thank you. Chris, hopefully after last night, what was that one? Hopefully after tonight, the haters won't be watching and mouthing off a second time. Thanks, Chris. Roger, good evening. Okay, so that being said, make sure you answer the question just once. Second, if you're going to ask me to take a look at something, I got 2 criteria and only 2. You ready? Number 1, consistency of profitability. Please don't have me look at a stock that you already know is not consistently profitable, because I'm going to check. And it'll be do nothing but wasting time, not for just me. I mean, that's okay for me, but we got anywhere between 10 to 20,000 people in the audience. It would be inconsiderate to waste their time because you don't do your research. So I got 5 simple rules. Rule number 1. Never buy something you don't understand. If you don't understand it, don't buy it. And if you don't understand it, don't ask me to do the homework for you, okay? So I'm looking for consistency of profitability and weekly options. Rule number 2, never sell at a loss. It defeats the purpose. I mean, think about it. Why would you make an investment and then turn around and sell it for less when you paid for it? That makes no sense at all. It's defeating the purpose of the investment in the first place, which means you didn't pay attention to rule number 1. Never buy something you don't understand. Okay? Rule number 3. Make sure the company is consistently profitable. I don't know why. And trust me, you will see this. There will be someone, there always is, that asks me to take a look at a company, and when I look at it, it's like, what the hell were you thinking? Consistency of profitability. Make sure the company you want me to take a look at has some good profits, because I'm not looking for pie in the sky, rocket ship to the moon type scenario. I'm looking for a simple, safe, consistent weekly cash flow. That's what I'm looking for. I'm looking for companies to pay dividends. I'm looking for companies that have consistent profitability, that are at least a bare minimum of 20 years old. Okay? Okay, if you're not old enough to drink in the United States until you're 21, well, why would I put my money into a company that's not at least 21? Think about it. Kind of makes sense. Anyway, so let's take a look at the list. Not the list, sorry, the order that we're looking at. Intel. So here's the order right here. If I was going to do an option order on Intel for tomorrow, buy 1 covered call Intel, INTC, 100, that is the weekly. 13 June 25. Well, that tells me that this option is going to expire this coming Friday. So whoever buys it from me, you got 3 days to decide what you want to do. And then that option expires. But, well, let me finish first before I get to the but. 13 June 25, that's this coming Friday. The $22 call option against the stock Intel at the market to open to open. It's two orders. To open means we got 2 orders. We're buying the stock, we're selling the option. We're looking for a safe, predictable 1%. Who do we got here? Lucky Goop. Goop Lucky? Gope Lucky? Okay, it's an interesting name. It is what it is. Holy cow. 86 is in the house, and it's not even 10 o'clock yet. All right, dude. Missed you for a while, brother. Haven't seen you. All right, what do we have over here? Stay off the grid. Oh, staying off the grid. Lovely. I buy gold only. Alrighty then. Now, the funny thing is, Zhang Fu, this is like the 5th, 6th, or 7th time you've actually shown up, because you got one of those names that you really can't ignore it. So if you only buy gold, this is like the 5th or 6th time you've been here. And I told you the first time you were here, I don't buy gold and I don't look at gold because you can't get cash flow from gold. So it begs to, I'm confused. If you only buy gold, why are you wasting your time here? Because I don't do gold. And you already know that. So I'm kind of curious. Is there nothing else to do in your world other than waste time looking at dividend stock investing when you don't do dividend stock investing? You only do gold? That makes no sense to me, brother. Sorry. Ali, how you doing? All right, so we got some people who want to take a look at CVS. Yeah, 86 is early. And Alibaba. Okay, ooh, Moderna. We'll take a look at those 3 in a second. Okay, hold that thought. We're going to finish up with Intel. Okay, so that's the order right there in the green. Right here. Buy one covered call, blah, blah, blah. Now, my maximum profit on this one particular trade is 51 bucks. What is it costing me? 2,100. Now, anytime you've seen any one of my videos, I always start out the exact same. Hey, this is James from Dividend Stock Talk, brought to you by the 10MinuteTrader, blah, blah, blah. I'm looking for a simple, safe, predictable, consistent 1% per week. Okay, so let's take a look at it one step at a time. Simple. Well, the simplest trading strategy is to buy a stock. But the funny thing about buying a stock, you have no idea what your profit's going to be. So it's not predictable and it's not consistent because you can't do it over and over again. You buy the stock once and then, well, what do you do then? Well, that's not predictable. It's not consistent. All right, so let's take a look at the covered call. A simple strategy. It's not the simplest, but it is still a simple strategy. You buy the stock at a certain price. Okay, this moment we're looking at 21.92. Okay, buying the stock, and then we're selling the rights to someone else to buy it from me at the exact same price I just paid for it. So if I'm paying 22 bucks for it, and I'm selling it to someone else at 22 bucks for it, where do I get my money? Well, my money comes from the option. I'm selling somebody the right to buy it from me at the exact same price. I'm just acting as another middleman. Think of it, it's kind of like middle management. No real purpose in the world, but they still get paid. Think about it, okay? In manufacturing, you got the workers. They're the ones who do all the work. You got the CEO, the CFO, and all the board members. Well, they do all the paper shuffling. But then you got middle management. What do? Kind of like glorified babysitters, but they still get paid. All right, so if I'm buying it at 22, selling it at 22, I'm picking up the premium. Now, the premium, well, that lets me know what my profit's going to be before I even do it. And that number's right here. Maximum profit on this trade, 51 bucks. Well, how much is this trade costing me? Well, this trade is costing me $21.49. Well, I'm not really spending the money. I consider it as investing the money. Because if I'm buying it at 22 and I'm selling it at 22, I'm basically saying, hey, here's my money. Hold on to it for a minute while I do this. So what I'm doing is, I'm getting a little profit and then I get all my money back. But I get my profit, 69. Well, how do we find out what rate of return that is? Well, it's a simple math problem. A plus B equals C. Or in this case, purchase price, okay, wait a minute, profit divided by purchase price equals rate of return. All right, so profit divided by purchase price equals rate of return. Okay, so the profit, $69. And for this, we're going to need a little bit of help with Mr. Calculator. Here we go, Mr. Calculator. Clear that out of the way. Okay, $69 is the profit. Okay, maximum profit, $69. And we divide that by the cost of the trade, including commissions and fees, 2131. 2131. A grand total of 3.2% for 3 days. So if I do this trade tomorrow morning, by Friday afternoon, if it stays where it is, $22 or higher, I'm making 3.2%. Now, 1% a week is 50% per year. So 3% a week, that's another math problem, isn't it? Well, 50% a year is at 1%. Well, 3% is like 150% per year. That's like doubling your money in what, 9, 10 months? Well, I'm okay with that. But then we're back to those 5 questions again. Does it make sense? Do I like this company? Am I willing to buy it? Am I willing to hold it? Am I willing to do covered calls and never sell it for less than I paid for it? I can't answer that question for you guys. Okay, you've got to figure out, do I like Intel? Does it make sense? All right, so I like Intel, so I'm going to write it down. And what was the percentage? 3.2. Nice. 3.2. Wow, we got some nice ones this week. You got a 4.7, a 2, a 5.4, 3, 3.6, 3.2. That's 6 good ones right there. I like all 6 of them. All right. Next. Let's do next. What do we have for next? Delete. Let's get back to where we were. There we go. All right. Alrighty. Come on. How do I make that bigger? I don't know how to make this one bigger. All right, I'll leave it alone. All right, so CVS, Alibaba, and Moderna. All right, now CVS was a pick from last week. All right, so from now on, we're going to pick 5 stocks during the week. Last week, CVS was one of those stocks. So let's pull that one up because someone wants to take a look at it. Now, last week, we looked at CVS at a 1.7 return for last week. All right, so here's the high, here's the low, here's where it was, here's where it is. Look at this action right here. But look, sideways, up, down, up, down. Now we're right here, 64.26. All right, well, the 65 doesn't make sense for this week. But does it make sense for next week? Okay, the 65 for next week is 87, which is about 1.5%. Now, 1.5%, well, that's about 70 to 80% for 1 year. And I'm terribly sorry if you have to get up every morning and, water your garden and feed your plants. Same thing. Look at your money and make the arrangements. Okay, what is this stock doing? I get X amount in this stock. Well, what is it doing? What should I do? It's kind of like a plant. If you have a garden, tomatoes, cucumbers, squash, whatever, you go outside, you water it. Great, look at it. Do you need to trim it? Do you need to do this? Do you need to do that? What do you need to do? Well, it's the same thing with your money. What did I buy? What did I sell against it? What did I collect? And is there something I need to do before the option expires on Friday? They're all simple questions. All right, so let's take a better look at CVS because I like this right here, but I want a closer look at it. All right, so a year ago, CVS is right around $60. The bottom of the year was in the end of the year, end of December. That was $43.49. Well, the top of the year, we got right there, the 1st of May. and that was 72.51. So she drops back up, drops back up, drops back up. But look at the motion here. We go from 60 to 64. That's a $4 increase. Well, a $4 increase on a $60 stock, it's like what, 8%? That's not even close yet. We still got a lot of room to go. So there's a lot of room to play in this little playground, if, of course, you like CVS. And that's always the deciding factor. Okay, you may not like CVS, but you can't argue with the numbers, so let's take a look. Okay, here's the last 30 days. Here's our high, bottomed out, retraced, bottomed out again, and now we're slowly going to the upside. Now, if you wanted to, you could break this chart down further to find out more details. But the trading strategy I'm showing you was created for a 9-year-old. Simple, 1, 2, 3, yes, no, good, move on with my day. So at some point in time, you have to decide, what is my time worth? Do I want to sit in front of my computer longer, make a few extra pennies? Well, I'm terribly sorry, and I'm going to apologize now. For me, I honestly really don't care about the little pennies. I'm looking for 1% a week. If I make 1% a week, great. Wash my hands, done. I'm doing something else. Because I'm at that point in my life when money is no longer a driving factor. It's a necessary evil. Yeah, I get it. So 1% a week is fine for me. But you guys might be in a little bit different scenario. So if you sit in front of your computer a little bit longer, well, you can tweak here and there. A limit order, I don't want this number, I want this number, it moved this way, maybe I can do that. There's a lot of things you can do. The longer you sit in front of your computer, the more money you can make. But it's always going to be a trade-off. Time, money. How much time do you want to invest into it, opposed to how much money you want to make? Come up with a decision, come up with a plan, and then stick to it. Okay, what do we got here? Rich Bruner. Jill got her Porsche. Yep. Thanks to my trading strategy. You know what? I want a picture of Jill next to that Porsche and saying, hey, you know what? I'm going to send you a t-shirt and have Jill sitting and standing next to her Porsche. Oh, doing the Vanna White thing. What do you think, Richard? Do you think you could talk Jill into doing that? All right, Mike's got a question. You stated you only had 3 losses on the year. Please describe what happened those losses to cause them. Hey, Mike, good question. All right, now, Mike, number 1. The TDS, Trump derangement syndrome. Trump said we're going to do what do you call those things? Tariffs. Everybody panicked, sold, stocks dropped. Okay, we all saw it. Okay, just because he said something and caused something to, and people overreacted, stocks dropped. So I got what was called a margin call. Margin call means you're spending money you shouldn't be spending. Well, I've been doing margin for 15 years, so I really understand it, but I wasn't ready for that kind of a drop. All right. So the drop came, I had to sell something quick or put more money in. Well, if I put more money in, it affects the rate of returns. So if I start at the beginning of the year with X amount, all right, it's easier to track and easier to show people if I don't add more money, because that's just throwing money at a problem, because not everybody has the opportunity to throw more money in. All right, so I got the margin call. Great. What do you do? Well, out of the 6 positions I had, I took 4 of them and I pushed them 8 weeks into the future to cover the margin call. But it still wasn't enough. So I had to liquidate one of them, Riley, and cover the rest of the margin. Because I didn't want to put more money in, because I put more money in, it affects the rates of returns. And people start pointing fingers, you did this, you did that. I wanted to keep everything even and level, so no money put it in. How do you solve the problem without throwing money at it? Great. Push some of the covered calls forward, gain some extra money, and then had to take a loss on Riley. Okay, fine. The second one, Harley Davidson. Wait a minute, it wasn't Harley Davidson, it was Altria. Now, Altria, we were doing an experimental trade called a calendar spread. Now, I do the calendar spreads often, but I don't teach it here. So don't ask me for details, but just let me know. Just to let you know, it has to do with two options. You buy one option, you sell another option. Well, the option that I sold, someone decided, hey, I want those. So they exercised the option. And when they exercised the option, I had to deliver the options at that price. Had nothing to do with the other option, because the other option didn't handle this. So yeah, Altria was another loss. Third one was Harley Davidson. Now I had Harley Davidson at 35, and I've had it since last October. So every single week I would get a cash flow from Harley Davidson. Well, 2 weeks ago, I sold, I believe, the 22s because Harley Davidson was down in the low 20s. And then when I went to roll it forward, that roll forward order never filled. And this is one of the main issues you're going to have if you have too much going on at one time. So for some strange reason or another, Harley Davidson got lost in the shuffle and fell between the cracks, and it got sold at 22 rather than the 35. Now, I didn't lose any money on it, but it's still showing up in my account as a loss because I bought it at 35 and it ended up selling it at 22. But the information, the stock purchase and the sale, that has nothing to do with the dividends that I collected and all the premiums I collected. So once you add all the dividends and premiums you collected, well, I didn't lose any money on Harley Davidson. But that's not what the spreadsheet says. The spreadsheet says you bought it at 35, you sold it at 22. So the spreadsheet says I lost, but it doesn't allow me to add the dividends or the premiums into the current spreadsheet that Thinkorswim has. Okay, so all the profits you get from covered calls and from dividends don't go towards the stock. It goes to the cash account. Okay, so even though I've had Harley Davidson since October, okay, that's every single week I sold a premium against it. Every single week I collected money. All that money didn't go to say, hey, your Harley Davidson enterprise got you this much money. Yeah, so Harley Davidson, Riley, and Altria. Okay, those are the three losses I had this year. Now I have over 200, 300, 400 trades, but out of 200 or 300, 400 trades, it's only 3 losses, which I think is pretty good. What stock is that? Intel, blah. Okay, Moderna, mRNA. That's the third one we want to take a look at. So, Mike, I hope that answered the question. Junior, how you doing? GP, good evening. David, Big Sexy's in the house. Randall Ray, what are you doing over that channel, dude? Okay, so San wants to take a look at Moderna. So, Moderna it is. Here we go. All right, so that's CVS. Wait a second. We didn't finish with CVS. Well, CVS still has a lot more space to run. So let's do a trade on CVS at the $64 area. Because at 64, they're paying out a nice premium this week. Not this week, next week. So let's check it out. Okay, this will be the second one we take a look at. Let's get out of there. Let's change this to covered call, and let's take a look at the 64. Right there, one contract. Now, you guys can figure out on your own, because we all have a different amount of cash in our little fingertips. So you got to figure out how many contracts can I do? Well, if one contract, well, let's take a look at this one, get the actual numbers, and then we can go from there. Okay, here's the order. Buy one covered call, CVS 100, that's the weeklies. 20 June 25. You notice the date, 20 June 25? That's not this Friday. That's next Friday. Okay, so they have a week and a half to figure out this one. The $64 call option against the CVS stock at the market to open. That's the order. And this green line's the order. Now, if you have any questions, just in case you didn't know, this screen here, just a screen, is live on YouTube. So you could, if you have the capability, pull it up on your big screen TV in the living room, dining room, or wherever you have your big screen TV and watch it there. I got to alternate that just a little bit. Ooh, wow. Okay. Perfect. Okay, that's a better view. All right, got a question over here. Shrad, I've heard it said that one should buy low and sell high. Yeah, you'll hear that over and over and over again. The most money you're going to make, the most you're going to be profitable is buying low and selling high. All right, so anyway, profit here, 111. Okay, maximum profit, 111. Now this is per contract. One contract, 115. Two contracts, 230. Three contracts, 345, so on and so forth. Now we all know how much money we have in our account, or at least as adults, you should have a good idea of what you have in your account. All right, so profit 115, cost of trade including commissions and fees 62.85. Well, let's get that math going. Here we go. Bring it on, bring it on, bring it on. Here we go. All right, maximum profit 115 divided by the investment 62.85 comes to a grand total of 1.8%. So here's the part where you think to yourself, do I like CVS enough to get 1.8% return? Well, it's a simple question. Either you like CVS or you don't. All righty. Ooh, nice. Like that. Delete. Let's get back to where we were, back to the beginning. And somebody wanted to take a look at Moderna, mRNA. mRNA. Ooh, that don't look that good. Now, I always tell people it should take you 3 to 4 seconds to analyze a chart. Okay? High, low. Look at the direction. That's it. It's just dropping and there's no retracement. Okay? Has it found the bottom? What's going on there? It's just going sideways. What's the last 30 days? Let's go last 90 days. Okay? Here's the last 3 months. High, low, where was it? Where is it? Look at this. Down, up, down, up. Okay. Last 30. Take a look at the last 30. Here's your last 30 days. Here's your bottom. Here's your top. She pulled back. Now she's going back up again. What's going on here? This looks more of a going sideways. Okay, so yesterday was a nice day. Today pulled back a little bit. So it kind of makes me want to step back and say, not this week, Moderna, thank you anyway. But that's a choice you got to make. Okay, Jersey wants to take a look at, hey, Roger, what's going on? Cajun, Bert, Steve, Raffaello, que pasa? All right, hello again. Believe 3 and 1. Do you use E-Trade, Robinhood, or another platform for your system? Okay, Believe 3 to 1. I use Robinhood and I use Thinkorswim. This right here is Thinkorswim, which is available through Charles Schwab. It's one of the biggest broker houses in the land. So yeah, I still use that one. Zhang Fu. So you live off your insurance premiums? Exactly. Richard. Moderna has nothing going for it since COVID. Well, Richard, from what I'm looking at, it's going sideways. Today was a little bit of pullback, so I'm not going to do Moderna. It doesn't look that appealing to me. Somebody wanted to take a look at Alibaba. Tommy Mack wanted to take a look at Alibaba. Interesting. Now, I really don't do Alibaba. There's a lot of gaps going on here. But look at the chart. It's got a nice movement. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Up, down, up, down, up, down. Now it's going back up again. Well, it's easy to see it. But do you like it? Now, when I take a look at any stock, I like to take a look at what the dividends look like. How consistently are they increasing their dividends or their profits? Because they kind of go hand in hand. Because when a company has profits, Well, you got two choices. They take those profits, they put it back into the company for capital growth. If that's what you're looking for, you're in the wrong place. Or they take the profits and they share it with the investors. That's me and you, or you and me, or the both of us, whatever. Okay, but they share their profits. Well, Alibaba only has like 2 years of dividends, maybe 3. So it's not something I would really do. But other than that, either way. Okay, here's the high. She drops down, retraces back down. Now she's definitely in an upturn. So what's the last 30 days look like? Now, the reason why I jump to the last 30 days all the time, because the last 30 days will give you a good idea of where it's going next, hypothetically speaking, of course. There's no guarantees. Well, there's only 3 guarantees in life. That's about it. But here we are right here. From 126 jumps up to 134. Then 134 drops down to 112. Now we're shooting back up. We're at 121. But from 112 to 121 is $9. What is that, 8%? It's an 8% increase from the bottom to here. So how much more is it going to go up before this profit taking? I mean, that might be an interesting thing to figure out. Is there a way to figure out the mathematics of 30-day bottom? What's the distance between the 30-day bottom going to the upside? Where is 5%? Where's 10%? Where's 15%? Well, you can get some AI to do that for you. Now, I don't use that kind of stuff. Okay, I don't trust computers as far as I can throw them. Jersey wants to take a look at Mara. M-A-R-A. Ooh, I like that. See, 3 to 4 seconds. That should be all it takes. High, low, is. Look at the motion. Up, down, up. It's right there. It's going up. Here's the bottom of the year. Buy low, sell high. Well, there's the bottom. Jersey will take a look at that in a minute. Big Drew. How you doing, Big Drew? Andrew, what stock do you think is worth investing in during this ICE fiasco? Well, Andrew, to be 100% honest with you, I don't pay attention to the noise in the media. I don't. Because if you think about it, the crap that's happening in California, well, are they doing that on purpose so you're not watching what they're doing in D.C.? I mean, think about it. A lot of the crap we've seen over the last few months and all the crap that the government is trying to pull over us. Well, why is that crap happening in California? And is it planned? Are the puppet masters creating that kind of chaos so that all the eyes are focused over there? Okay, so you always be aware of what's happening in front of you. Because if they're doing it on purpose, well, maybe they have something going on with the other hand. Think about it. Why is it that they're showing you that stuff? Why is it they're not showing you the stuff that they're doing while you're not looking? Because the Federal Reserve didn't come into power until everybody had left for the Christmas holiday back in 1913. Everybody left. And there was only like, 7 people left yeah. I don't trust the government as far as I can throw them, so I think someone's up to something. Hold that thought. All right, Richard. 3 guarantees in life: life, death, and taxes. Okay, interesting. I always thought it was death, taxes, and disappointment. But life, I'm not quite sure that's a guarantee. Tesla, leap covered call option. Make it back to 225. All right, Krupp, thank you for that. Is that Sean? Is Misty a good dividend stock? Now, Sean, I'm going to be 100% honest with you. I don't like Misty only because the numbers are unsustainable. But if you're interested in short-term capital growth, well, Misty might be it for you. But if you take a good hard look at the numbers, look how consistently profitable they are. Look how consistently they increase their dividends. And then look at the current yield that they're offering. And then ask yourself, where's that money coming from? It's a very important question you should be asking yourself. Andrew! Oh, thoughts on VC properties. Oh, Lockheed Martin. Uh-oh. All right, hold that thought for a second. All right. Jersey, want to look at Mara? Well, here's Mara right here. Nice upward movement there. I like that. High, low, was, is. Look at the movement. Looks great. Wonderful. What do the numbers look like for this week as opposed to next week? Well, this week, let's change that. I'm looking at the wrong thing here. Looking at the wrong thing, which doesn't help me. I got to adjust this a little bit. Is that better? Yeah, that's a little better. Oh, bloody jolly good. All right, so I like the chart. I like the way it looks. The numbers look okay because we're currently at 1641. The 1650 for this week is going for 44. Well, that's a nice number. Well, next week's 16 is going for 98. Well, that's 5%. Well, which would you prefer? 4% for this week or 5% for next week? Well, let's take a look. All right, a year ago, Mara's at 1946. A high of the year, back at the end of November, we're looking at 30 bucks. 30 bucks. Okay, listen closely. The high of the year, $30. The low of the year, 10 bucks. Okay, that is a 66% drop. Okay, remember I told you stocks can drop anywhere from, 10, 20, 30, 40, 50, 60%. This one's 66% drop. Look at that. But look at the movement from here. Here's the bottom, rock bottom right there this year, 10 bucks. Well, now we're at 16. That's a 60% increase. Okay, you got a 66% decrease, okay, from 30 bucks to 10. But from $10 to 16 is a 60% increase. Isn't that weird? 66% decrease, 60% increase. Well, that's pretty good if you think about it. Andrew Frost, Ligma. You got to explain to me what the hell Ligma. Okay, so hold that thought. We'll get to that one in a second. Let's finish up with Mara first. Okay. Okay, hold up with the questions. All right, so check a look at this. Here's your bottom right here, the beginning of April, and that's at 10 bucks. Well, between here and here is a 60% increase. So what do you think? Do you think a 60% increase qualifies for profit taken? Yeah, probably does. But that is 2 months. Okay? That's 60 days. That's not 30 days. That's 60 days right there. So let's take a look at the last 30 days. Okay, the last 30 days looks a little bit different, doesn't it? 30 days we're at 14, jumped up to 1750, dropped back down to 14. Now we're at 1650. Could it keep going up? Yeah, it could. The question should be, do I like Mara enough to buy it where it is? Because the 1650 is going for 44 for the next 3 days. So here's an interesting thought. Interesting thought, you ready? So let's say hypothetically you buy it at 1649 and you sell the 15s. See, the further up you go, the safer it gets. But the further up you go, the less profits you make. So there's the balance. Always, always, always going to be about the numbers. What am I buying it for? What am I selling it for? What am I collecting? Is it 1% or more or 1% or less? Do I like this stock? Am I willing to hold on to it? These are all valid questions. Okay. What else do we want to look at? Mara, we looked at. Ooh, Big Drew wants to take a look at Comcast. CMCSA. Ooh, gotta like this one too. Should take you 3 to 4 seconds. If you go to invest. Now, see, the way I value my time is different than other people. I can take a look at this stock, and within 3 to 4 seconds, I can tell you 5 things that I'm looking for in a stock chart. High, low, where was it, where is it, and what direction? Up, down, up. 3 the 4 seconds. And once it passes that, well then, I'm going to go over to here. It's currently at 35.63. So the 36 is going for 13. Yeah, not this week. Next week's 36 is going for 32. No. Okay, now don't get me wrong. I like Comcast, I do. They incorporated in 1964. They have over 60 million customers that pay them every single month. 60 million customers that pay them every month. That's freaking huge. Anyway, I don't like the numbers. Barely 1%. For how many days is that? 10 days? Okay, see this little tiny number here? 13 June, we got 3 days. Okay, 20 June, we got 10 days. Okay, well, 10 days is only offering me 1%. Yeah, no thank you. Sorry, dude. Don't get me wrong, I like Comcast. I do. I like to consider a loss more of a tax on your winnings. 86, that's an interesting way of looking at it. Okay, Jason, we're going to take a look at that Riley in a little bit. But apparently, Mr. Andrew is hot and bothered about LIGMA. Now, Andrew, you do know that you lose brownie points if I look at that and it's a turd. Because I don't want to insult your guessing or what it is you're doing. LIGMA. Is that right? LIGMA. Okay. And strangely, when it says we can't find that symbol, what am I supposed to say to that one, Andrew? LIGMA is not showing up in Charles Schwab. Now, Charles Schwab is one of the biggest trading platforms, one of the biggest money brokers there are on the planet. Well, if they can't find it, why am I looking at it? Sorry, dude. Brent, SUGMA. What the heck is that? SUGMA. That's the same thing. Can't find that symbol. Well, if we can't find the symbols, why are we looking? Okay, Jason wants to take a look at Riley. Now, I like Riley. I actually have some Riley. I probably have more Riley than I should have. But let's take a gander. Uh-oh. What am I doing? No, not that one. That one. There we go. All right. That being said, here's Riley. High, low, was, is. Look at the direction. Down, sideways. Now, you want to talk about disappointing. Take a look at Riley and ask yourself, well, if it's so bad, why do you have it? Well, take a look. You ready? The high of the year is 24. That's the high of the year, 24. The low of the year is 290. So from 24 to 290, what is that, a 90% drop? That's a 90% drop. How would you feel if you owned it at 24, now it's trading at $3? Think about it. Now, I didn't buy it there. I bought it at $3. It's at $3.17 now. All right, so let's take a look at the numbers. I do like Riley only because the numbers look freaking awesome. All right, so the last 90 days, last 3 months, okay, up, down, sideways, basically, that's what it is, up, down, sideways. So what's going on here? So let's zoom in a little bit closer to the last 30 days. Okay, this is the last 30 days. Well, that looks a hell of a lot better, doesn't it? Okay, anytime you change from 1 year to 1 year chart, 90-day chart, 30-day chart, total different picture. Rod Stewart in the 1970s, who knew exactly what year? Rod Stewart, 1970s. Every picture tells a story. That's the name of the song. Every picture tells a story. When? Rod Stewart, 1970, who knows? Okay, 30 days ago. 280. Shoots up to 380. Drops back down. Now we're at 317. Look at this movement right here. That's 1, 2, 3 days to the upside from the bottom last Thursday. So last Thursday's bottom, Friday was higher, Monday was higher, today's higher. Well, great. Well, let's take a look. All right, let's get out of this. Let's go covered call. Let's take a look at the 3, which would be right there for this week. 1 contract at the market. There we go. And here's Johnny. By 1 covered call, Riley, 100. That's the weeklies. 13 June 25. That's this Friday. That's 3 days away. The $3 call option against the Riley stock at the market to open. Remember, 2 orders, buying stock, selling the option, 2 orders. Okay. Maximum profit, $7.50. Well, that's horrible. Well, look what it's costing me, $293. Well, what does that mean? It doesn't mean anything until you throw it into the calculator to figure it out. Unless, of course, you can figure it out in your head. Well, let's figure it out. Here we go. $7.50. Okay, divided by 293. Comes to a grand total of 2.5% for 3 days. But you got to ask yourself the question, do I like Riley? Do I want to own it? Am I okay with Riley? Get back to where you once belong. All right, so Lumina, we just looked at that. Okay, Anthony, Palantir. My. Okay, hold on a second. Okay, Krupp, Lockheed Martin, LMT. Krupp wants to take a look at Lockheed Martin, LMT. No. Wasn't that quick? Reason I'm saying no, look at this right here. Okay, bottom top, 1, 2, 3, 4 days. 4 days comes to the downside. Okay, quick. It should take you 3 to 4 seconds. Once you figure that out, great. Well, don't get me wrong. I like Lockheed Martin. Now, I bought Lockheed Martin plenty of times. But for me, it's not the time to buy. Your bottom's here, 466. It jumped up to 486. That's a $20 increase. Well, now she's starting to come down. Okay, I won't jump into Lockheed Martin until it does this right here. Find a new bottom, turn around, go back up again. So, no to Lockheed Martin today. Yes, Cajun, I know Mara has no dividends. But Mara is on, or was on, Warren Buffett's list at one time, as far as I remember, as I recall. Next, AXON. What is that? AXON. Axon Enterprises. Interesting. I'm going to say no for a couple of reasons. Okay, you ready for the reasons? Okay, Krupp, you ready for the reasons? Reason number 1, 20 June, 18 July, 19 September, 19 December. Those are months of the year, which means this company doesn't have weekly options. Remember, 2 criteria, consistent profitability, weekly options. No weekly options, no thank you. But thank you for wasting my time. It was very nice of you. Thoughts on VC properties. What the heck is VC properties? VICI. Didn't we just have this conversation like 2 seconds ago? I don't do monthlies. The numbers just don't work. Okay, if you can invest in a stock option, well, once a month, I can get 12 to 24% per year. Now, a lot of you might be thinking, oh, 24% a year, that's great. Or I can do weekly options and get 1% every week and make 50 to 100% a year. It's a simple question. Do I want 12 to 24? Or do I want 50 to 100? There's no hidden agenda. It's either monthly, weekly. Monthly, weekly. Okay, you decide what you want to do. I don't do monthlies because the numbers just don't work for me. Okay, you might like it. I personally don't. Next, thoughts on VC? Yeah, no, thank you. Who do we got here? Andrew. That's been the question forever. There's always a smoke screen, but there's also more interest and investments during the scare. Still money to be earned. Absolutely. Now, money never really disappears, Andrew. Okay? In the stock market, it's a zero-sum game. Money disappears here, but it shows up over here. It doesn't vanish. It doesn't disappear. People lose money. Well, people make money. Okay? If you're losing money, someone else is making money. Okay? So it's not just, it just disappears. Someone's losing, someone's winning. It's always the way it is. Did you see Casey? Haphazard. We'll take a look at Casey in a minute. Let me finish up what we have over here. Cajun, why are you covering Mara and Riley? Neither have dividends. Okay, Cajun, let me see if I can explain this slowly. I invest in companies on the dividend kings, dividend aristocrats, dividend champions, dividend contenders. Those are all dividend stocks. However, list number 5, Warren Buffett's list. So Warren Buffett's list, they don't all have weekly options and they don't all have dividends. But for some strange reason, the old boy seems to like those companies. So if it's good enough for Warren, it's good enough for me. Now I am thinking about, do I want to do Ray Dalio's list? Do I want to do Kathy Wood's list? I mean, how successful are those two? Are they worth looking at? I don't know. I mean, I seem to be doing fine with just, the 5 lists I already have. Should I add a 6th one or a 7th one? I don't know. Kyle, Amazon. How's Amazon looking for this week? Because see, I don't do Amazon because I don't go stocks over $250. Okay? I'm glad you get it. Kiki, what about Palantir? Kiki, is always somebody asking me about Palantir. Always. Always, always, and always. Palantir, Tesla, and what's that other one? There's another one. I forget what it is. Okay. PLTR. There it is, right there. Palantir. So, Kiki, I'm going to look up Yahoo Finance. Okay. In Yahoo Finance, they're going to tell me some details about Palantir. Now, what I'm looking for specifically, 10 my Mac. Is that right? Oh, Tommy Mac. I don't do IPOs, Tommy. When I say 2 decades, that's 20 years. IPOs don't have 20 years. That means they're initial public offerings. That means they're no right off the bat. Okay. All right, Kiki, Palantir. Do you see this right here? Okay, the open, the high, the low, the bid, the ask, the days range, the year range, the volume, the average volume. Look at this, 102 million shares a day trade on average on Palantir. But take a look at this right over here. Forward dividend and yield. There's nothing there. Okay? And look at this. Kiki, did you see this? The current price, 132. Look at the projection for 1 year. The 1 year estimated target, 100. So they're estimating the stock to come down in a year. So why are you looking at it? 2, 1, whoever did this information, well, they think the stock's going to drop down to 100 by the end of by next year. Well, that would make me question it. Second, it has no dividends. So if it has no dividends, how do I know when it's going to move? Because dividend stocks are predictable. They do certain movements a certain time every single year. I can actually set my clock by it. Why does Weight Watchers stock go up in the beginning of every year? Well, does it really matter why? They just do, but we all know why. Think about it. Weight Watchers goes up at the beginning of every year. That kind of makes sense. Soccer King. Soccer King, I love your enthusiasm. I do. Please don't do that. He's doing it anyway. Okay, yeah, I asked you nicely not to do that, but you did it anyway. All right, so that's Palantir. Don't get me wrong. Some people like it, some people don't. They don't have dividends. How do I tell if they're consistently profitable? You want me to read 20 years worth of quarterly reports and annual reports? Well, is this company even 20 years old? I don't know. There's 10,066 different companies. What makes this one so special? Especially when you have analysts saying it's going to be at $100 in a year. Well, it's at 132 now. That doesn't give me a warm, fuzzy feeling to put my money into it. And they don't pay dividends. So how do I know if they're profitable? So I'm going to say no to Palantir. That's me, though. All right. Richard L. Read what I said again. You missed one. I did. Okay, Richard, you do realize there's, okay, all right. 3 guarantees in life: death, taxes, life, death, taxes. And any stock I own will go down. I like that one. That's a good one. Okay, got that one. Got that one. Bullseye. Would you rather see a tree grow? Yes, I would. Remix 40. Hello, Gramps. 420-ish. Well, good for you. Bitcoin. Okay, I don't do Bitcoin, but thank you for your input. Lisa M. Good evening. Hope is all well. Everything is all well. Do I like, oh my goodness. Yes, Grandpa loves those kind of things. But here's the thing. You know what I like better than the stocks that you are requesting? I like better people paying attention, because apparently you're not paying attention. Okay, XRP doesn't have dividends, and XRP is not 20 years old. So everything you asked me to look at is no, no, and hell no. It's really not that difficult. I get 2 criteria and only 2. And it amazes me with somebody your age. Now, I can tell you're a young guy because only young guys call, hey, Gramps. Someone older than me is not going to say, hey, Gramps. They'll probably say, hey, young fella. Okay? All right. Dividend stock talk feed is not current. Uh-oh. What do you mean it's not current? Whenever you say that means I have to go check. All right, well, let's check it out. The 10-minute trader. Here we go. And here we go. Now, this is my website. You can see that's all my social media. So we're going to go to YouTube because someone's saying YouTube is not working properly. Ruben, Coca-Cola, love it. Chevron and Verizon. Ooh, yes, they are. What's the criteria? Okay. It says it's live. Yeah, that one's working. This is my web. All right, we don't need to see this one because the other one's working. What am I doing? All right, right back here. Here we go. All right. Yeah, it's working. Lumina wants to take a look at Coles. We'll take a look at it in a minute. PFP. What the heck is PFP? All right, hold on, I missed some questions. All right, we did Mara, Intel, Comcast. We did that. Christina Carlin. I gambled it and won. Awesome. Ronald, evening. Diane, good evening, Diane. Anthony, Palantir, we already looked at that. Wampa, good evening. Alexander, thank you for that. Lumina, we already looked at Riley. Haphazard, good evening. Haphazard, you're going to give me good stuff tonight, right? No more of that crap. Okay, Big Drew, we already looked at California. Okay, we already looked at Comcast. Haphazard, California has a liberal governor. Yeah, I get it. Okay, Haphazard got into Tesla at 285 on the dip. Okay. Did I see Casey? Okay, why am I looking at Casey? We know Casey is not on the list. Kasy, Casey. Okay? Now, haphazard, you know I don't do monthly options. So as excited as you are about it, I'm glad you got some excitement. Nothing wrong with that whatsoever. But you've been here long enough to know I don't do monthly optionable stocks. And this is a monthly. I don't do them, so why are you asking me to take a look? You got in at 285. Cool. I'm not quite sure what you want me to say. Thank you, 86. I understand. That's why I said I know you won't like it. Okay. Couldn't have spoken truer words from the younger generation. I know you don't like it, but I'm going to say it anyway. Don't know why. That would be... Nicholas. How are you today, Nicholas? Thanks for showing up. Football boy. Good evening. I need to plug in. I need to plug in. Need to plug in. Is that right? Yep. Good. All right. Wampa, how you doing? What are we looking at? I understand it. That's okay. Yep. Okay. Lovely. Tommy Mac, I don't do IPOs. Andrea, what is PFP, Andrea? PFP, Power Shares Global. Now, this has to be a new Andrea, because the Andrea that I know wouldn't suggest me looking at that, because that has no options whatsoever. Solana, MES. What the heck is MES? That's no such thing either. Andrea, Nike, NKE. Well, no, that looks good. Okay, what do we have over here? 420. The further up you go, the more euphoric the market is. Okay. Man, you want to look at a stock, Lunar and RKLB. Okay. NFA, all space and AI stocks will moon 230. Okay. Even BlackBerry is going to make a comeback after Apple did their announcement. Oh, cool. RMR. What the heck is that? Okay, Jamar, we're going to take a look at Nike. But what the heck is RMR? RMR. Rome. Yeah, hell no. I like it better when people pay attention. Okay, weekly options only. That's it. Weekly options only. Okay, if you don't understand what a stock is that you're looking at, okay, maybe you shouldn't be playing this game. I mean, I'm a Gen Xer. If you're looking for me to spare your feelings, you're in the wrong place. Terribly sorry. The way I grew up, it is what it is. Okay? There's no excuses for not knowing what you should already know. So if you're thinking of investing in money into a company, you should know something about that company you want to invest in. Now, I get no problem whatsoever taking a look at what it is you want me to look at. But it bothers me just a tiny bit when you ask me to look at something that you already know I'm not going to like and I'm not going to want to do it. So then why would you do that? There's a couple of thousand people here. You may think it's funny, you may think it's entertaining, but to entertain yourself at the expense of 1,000 other people, well, that's kind of childish and immature. Come on, we're all adults here. Let's do what we're here to do, okay? If you don't want to listen to what I got to say, you don't have to be here. But we're trying to look at dividend stocks for a possibility of making money, okay? Anyway, Nike, high, low, was, is. Look at the movement, down, sideways, down, up, cool. This might not be the greatest place in the world, because if you zoom in a little bit closer, okay, it's at the 30-day high. Okay, now see, I wouldn't mind buying what was down here, because stocks go up and then they come down. When they come down, see, it went up and then it came back down again. That's an indicator right there where you should be thinking about it. And then she shot up. I don't like to buy at the high, and it's at the high right now, so Nike's going to be a no. Haphazard, can you pay attention to TikTok? Okay, what? Oh, man. It's like I'm tempted to delete you and not listen to any more of your crap. Childish humor. Okay, Andre, I'm terribly sorry. Nike, it already made its move, in my opinion. Okay, Big Drew, Verizon, love Verizon. VZ, Verizon. Ouch, it looks like we might have the same scenario. Okay, let's zoom in close to take a look at it. Okay. All right. It doesn't look that favorable. See, 99 days ago. Sorry, not 9 days ago. 30 days ago. 30 days ago, we're at 43. We dropped down to 42, jump up to 44 and a half, drop back down. Well, now we're here again. There's not much more space to go to the high of the 30-day period. Because here's the low here at 42. Well, look at all this space here. Now, I like Verizon. Okay, they go up, they go down. Well, I'm waiting for it to come back down again before Verizon's in a better position. Okay, Lumina wants to take a look at Kohl's. All right, well, that looks interesting, doesn't it? High, low is, look at this, down, up. Well, that's an easy one. That was only like 2 to 3 seconds. Well, we're currently sitting at $9.40. So the closest strike price is going to be the $9.50. And that's going for 15 cents for this week. Well, what's next week going for? $29. Well, it's a $9.40 stock, but a 20-cent premium. Well, that's a little bit less than 3%. Well, that's not bad if you think about it. Because if 1% is 50% per year, 1% a week, 50% a year. Well, 3% has got to be at least 150% per year. Well, that's doubling your money after 9 months. That's pretty damn good. Well, let's take a closer look. So what do you think? Does it look like a good buy now? Here's your bottom right here. Look at this, shot up nicely. Well, look at all this space here. Okay, do you want to jump in and see if it goes higher? Well, that's something, I'm not that adventurous. Okay, I don't want to buy it and hope it goes higher. I'm not there. Tommy Mac. All right, Kente, Kente. Okay, what Kente is saying is someone is using a spam account with your information and trying to collect money from people. Unfortunately, I already know this. There's about, last I checked, there's about 30 people, 30 different people using my name, my pictures, my videos, and my content saying that it's me. Well, I'm here live right now, and you can actually hear what I am saying. If you want to have a conversation with me, I say this every night. If you want to have a conversation, put your phone number in a DM. Send me your phone number. I will give you a call. Okay. Tommy Mac wants to take a look at, okay, Joker, what's my criteria? Okay, Joker, I think I said it like 3 or 4 times. 2 criteria. 1, consistency of profitability. 2, weekly options. That's it, just 2 criteria. Consistently profitable for at least 2 decades, that's 20 years, and weekly options. That's it. Consistency of profitability and weekly options. If the company fits that parameter, fine, I'll take a look at it. All right, what do we have over here? Never mind, I actually paused stock dividend talk operator error. Okay, Mux. NBIS. What the heck is NBIS? NBIS. NBIS. No. Okay, now the reason why I'm saying no here is, what do you think? Take a look. Okay, 30 days ago we're at 20 bucks. Now we're at 55. Okay, that's a 100% increase. What do you think? Do you think it could keep going higher? Sorry, it's not a sandbox I want to play in. It's actually that simple. The move already happened. But you can't jump in after the fact and try to see if it will do it again. That's not something I want to do. Haphazard. Amazon is at 212. Okay. Hey, Real DD Realtor, what's going on? All right, so haphazard, you want to take a look at AMZN, huh? AMZN. Amazon. You ready? We're going to take a look at Amazon. Now, this here is Yahoo Finance for those you don't know. Yahoo Finance, it's free to use. Just give you detailed financial information on different companies. But lo and behold, take a look at this. Dividend yield, nothing. EX dividend, nothing. Okay, so why am I looking at it if they don't have dividends? Black Eyed Joe, KS. Black Eyed Joe, nice to see you again. Haven't seen you in a while. KS for Black Eyed Joe. Capstone Paper and Packaging. Okay, Black Eyed Joe, why isn't it popping up? It's not popping up. If it's not popping up, something's got to be up with it. Dan the Man wants to take a look at General Dynamics. General Dynamics. It should pop up quick. High, low, is, up, down, up, cold, 277. The 279s, 280s, go 110. Nope. 250. No. Sorry. General Dynamics is not giving me the money I'm looking for. No, don't get me wrong. I like General Dynamics. It's a good company. Consistently profitable. And it fits. Unfortunately, it's just not paying a good premium. Either that, the numbers are skewed. Look at this, 267, 279. That's a big spread. Now, when the market maker does that, he does it purposely to mess with us. Because these numbers here aren't accurate, which makes these numbers inaccurate, which makes it very difficult. Now, not all market makers do that. Only a few of them do. So they make it a little challenging. Oh no, Riley will be doing a reverse split. That's never a good thing. Lower highs, looks like it's ready to pop nice. Thank you. 3DTEK, better to do 2 weeks. All right, thank you. Do you know of Zebek Network focusing on payroll solutions? Getting laid off my second instead of the week by week. Okay, whatever. Probably NVDA. No, I don't do NVIDIA because they don't have dividends either. And NVIDIA has a crappy dividend. It's like 1 penny. It's like the stock's $130, but they're offering you 1 penny. Explain to me why you think that's good. $130, but they're paying you 1 penny for a dividend. Okay. Oh, look at that. CashMac wants Target. Cool beans. I like Target, TGT. It's a dividend king, means they've increased their dividends for 50 years. That's 5 decades, 50 years. Okay, so let's take a look. High, low, where was it? Where is it? Look at this. Up, down, sideways. We're here at $100. So $100, well, that's going for 184. The 101's going for 130. Well, I like these numbers. But, there's always a good but with Target. Target is notorious for having this right here. Do you see that huge gap? Let me zoom into it to get you a better look. Okay? A big gap here and a big gap right here. 155 to 120. That's a big gap. 155 to 120. That's a $40 drop. They call that a black swan. It's something that pops up out of nowhere. Nobody ever expected it. Well, Target is notorious for doing that. Happened once here, and then it happened once here. And it usually happens right around dividends and earnings. So even though I like it, but look at it. See? Down, up. Looks good. Where are we now with target? I don't know. What do you think? 30 days ago we're at 97. Shoot up to 103, drop down to 90, then shot back up to 103. Well, if the 30-day high is 103 and it's almost at 103 now, why would we jump in? Because from here to here, well, next is profit taking, in my humble opinion. Canada TikTok. Hello, James. How are you doing? Wanted to know your thoughts on Pfizer. Ooh, I like Pfizer. John, do you recommend to buy VOO and hold long term? Okay, John, context definitions. Okay? VOO is great for those people who say, I don't want to do it, let someone else do it. It's great for those people. Not for me. Okay, the numbers that VOO is offering just doesn't work for me. And when I say context, your idea of long term and my idea of long term, two totally different things. My idea of long term is 30 days. That's long term for me. Haphazard, Casey. Haphazard, I need you to do me a huge favor. Okay? Seriously, haphazard. I want you to go to a financial website, whichever one you look at. Okay? Take a look at the yield, the rate of return or the yield for Casey. Then look at how consistently has Casey increased their dividends, how many years. You come back with that information and we'll take a deep dive into Casey. Okay? It's wasting your time on the same stock. Yeah, I'm well aware of that. 305 Playa. Dude, it's been a while since I've seen you. SDIV. SDIV. There you go. So, SDIV. Two reasons. You like that? Two reasons. Two reasons why I don't like SDIV. Reason number one. It's at the high of the 30-day period. See, here's your bottom, here's your top. It's not where I want to buy. Second reason. 20 June, 18 July, 19 September, 19 December. That is a monthly optionable stock. It just does not work. Sorry. It does not work. But I haven't seen you in a while, Playa. Good evening. VYM, Ronald Barr Jr. VYM. Vanguard ETF. Okay, so Ronald, let me ask you a question. 20 June, 18 July, 15 August, 17 October. Are those months or are those weeks? That is a monthly optionable stock. I don't do monthlies. The numbers just don't work. I'm terribly sorry, Ronald. That's a no. That's a no. Okay. Innocent bystanders. AGNC has high dividends. What's your thoughts? Well, let's take a look. AGNC. Now, I want you to take a look at something, and I want you to take a look very closely for AGNC. You ready? $9.33 is the current price. The 950 is going for, what does that say right there? 0. Okay, what's this 950 going for? 2 cents. Now, certain companies have market makers that do certain things. Now, I used to trade AGNC, and I used to trade ET, which is Energy Transfer. Well, both of them have done the exact same thing. They created option premiums that are basically worthless. So why would I even look at them? Because it's not worth it for me to do them. Okay, so haphazard, please don't block me, your landscaper. Okay, great. Do me a favor. Ask me questions. Now, you've been here long enough. because you got a name that's easily recognizable. You've been here long enough, you know what I like and you know what I dislike. So do me the favor. Don't piss me off. Okay, we Gen Xers, we're a little weird about that kind of stuff. You know? We don't like to be disrespected. And we just assume block you and just not have to deal with it. Because you're not the only one here. Okay? On average, about 20 to 40,000 people come through these 7 different channels that I have. And for having you come up with stuff that you already know I don't like, well, you're inconveniencing other people. And it's, you know what? Look at the daily. Okay, but I honestly, see, you're missing something. You've been here long enough. You know how I do it. I don't do dailies. I take a look at the numbers. I'm a factual kind of person. Facts are what they are. The numbers are what they are. Okay? If they don't make sense, they don't make sense. There's no, oh, well, look at it this way or look at it that way. No, I'm not going to change what I do so that you can make a point, because it's still going to be a no. Why are you looking at it? No dividends. Okay, playa, thank you. Every once in a while, I will do a stock that has no dividends based on where did I get that information. If it's on Warren Buffett's list, I'll take a look at it. Okay, what is this one? Rubles Shama. Oh, Rubal Shama. Misty, no. YMAX, no. See, I like the idea that you're interacting. That's great, wonderful. But everybody keeps asking the same things, and for some strange reason, you guys aren't paying attention to it. Well, Misty, MSTY, just doesn't fit. So why do you keep asking for it, MSTY? Okay? See, it looks good here, right? See, it looks good there. Wonderful. Well, let's go to the financial website and actually take a look at the raw data itself. Okay, here we go, right here. MSTY. Okay, we're actually going to look at the data stream to see the actual numbers for Misty. In one spot, makes it easy to take a look at them. Here we go. All right, here we are on Yahoo Finance. We're going to go to historical data. Now, historical data will give us an idea of how consistently this thing has been profitable, because that's where the financial information is. Okay, come on, historical data, let's go. Here we go. Now, right here is the date range, and right here is the historical prices. So I want to click on that, and I want to look at just the dividends. Okay, click on that, dividends only, and then I want to look at all the dividends that they have. Now, wait a second. Do you see the very first dividend on Misty, April 4th, 2024? So explain to me, I honestly, now I'm going to say this really slowly, and I'm going to enunciate my words, because apparently you're not understanding. Everybody who wants to take a look at Misty, and there's a few of you, listen closely. 2 decades of profitability. Okay, 2 decades. Now, where I went to school, 2 decades is 20 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 20 years. Misty has a year and a half. A year and a half. That's 19 years off. Misty's a no just on principle. But to make matters worse, take a look at this. 412. Okay, that's a nice dividend. But the very next one is 250. So how do you go from 412 as a profit to 250 as a profit? That's not consistency in profitability. That's going backwards. Okay, see, if you're starting out with 412, the very next one should be 413 or 414, not 250. Okay? So Misty's a no. The numbers just don't work. And why are you looking at why are you buying things you don't understand? Now, the reason I'm saying why you don't understand them, because for some strange reason, You think that going from $4.12 to $2.50 is good. But then as it keeps progressing, it goes down to $1.90. Okay, even drops down to $1.30. From $4 to $1.30. How could you possibly say that's a good investment? Seriously. This is the part where I say, what the hell are you thinking? Now, remember I said earlier, why do people invest in companies that don't make sense? Well, I'll tell you why they invest in this one. Let's go over to the summary right here. And this what really boggles my mind. And I can't believe some of these people, well, I believe it, but it's just amazing. All right? All right, do you see this right here? This is the numbers for the stock. This number right here. Do you see this? 140%. 140%. Now, if anybody at all can explain to me how can a company pay out 140% of their profits? No one? No one has a comment on that one? It says it right here. Yield 140%, which means if I put in $100,000 at the end of the year, I will get $140,000. That's basically what that means. So I'm asking a question. I'm serious. What's the word I was looking for? I forget the word. I'm concerned. I have a question. I'm genuinely curious. How can anybody pay out 140% consistently? Okay? If I make $100 million, well, now I have to pay out $140 million. That makes no sense at all. So explain to me in a manner in which I'll understand where the hell is that money coming from? No one? Nobody has an answer? We have all these people here, and you guys, a lot of people, you like this company. Well, explain to me. You like it? Well, where's that money coming from? Think about it. How can anyone pay out more money than they're bringing in? It just makes no sense. Urban, you know? Well, how do you do it, Urban? I'm curious. Let's go on to the next one. Opinion on drips. I love drips. I do. Okay, so haphazard. You want me to take a look at the 10-year target. Why? I invest from Monday to Friday. That's 5 days. Why am I looking at 10 years of information? That doesn't make any sense to me. Ooh, Eric, Nucor. I like Nucor. N-U-E. All right, let's get out of that one. Right there. S-D-N-U-E. Nucor. Ooh, I like it. Look at that. High, low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up, down, up. Okay, 124. We're at 124.68. Okay, so I'm going to say no to this one before I even look at anything else. Now, I want you to explain closely. Haphazard, please, for the love of God, just look at the daily on Casey. Now, haphazard, I'm going to say this to you one more time. I do not sit in front of my computer all day long, which means I do not look at the daily chart. It does not me any good whatsoever. Okay? I have a strategy. 1 + 2 = 3. I'm not doing anything out of the ordinary to satisfy what it is you want to see. Terribly sorry. Okay, if you want to do your own channel, be my guest. Take a look at the daily. I have no desire whatsoever to look at the daily. I have 1 + 2 = 3. I have no desire whatsoever to look at something new. Okay? See, the way I look at it, I grew up in a time frame. Okay? 60s, 70s, and 80s. That's when I grew up. If it ain't broke, don't fix it. If it's working fine, leave it alone. So again, I ask you, why is it so important to you that I change my life to satisfy your question? Now, that's a valid question. Why should I change what I do to satisfy your desires if your desires don't fit what I'm doing? Okay? Now, I appreciate your interaction. I really do. Okay? And sometimes, every once in a while, you come up with something interesting. But I'm not changing my strategy for you to have me look at one scenario. And you haven't given me an answer to the question, where does that money come from? So you're a landscaper. So let's say, hypothetically speaking, you have a crew, right? And the person hiring you to do their landscaping pays you $1,000. Well, great. You just made $1,000. Now you got to pay out 140%. Now you got to pay out 1,400. Where's that 400 coming from? If Casey has 140% yield, well, the profit is all sucked up with that 100%. So where's that 40% coming from? 140%. So answer that question. You answer that question in a manner which I'll understand, and I will look at the dailies on Casey. It's not going to change my mind on Casey, but I'll look at it for you because I'm kind of curious. Where does the 140% come from? I want you to know that we really appreciate you teaching us. Thank you, player. Player, player. You know you got to have that coming at you with that kind of a name. Okay, why only 30-day long-term view? Why 30-day long-term view? I'm 61. I'm not guaranteed tomorrow, next week, the week after. Okay? I got a friend who's in my wedding. He's gone. He was younger than me, and he's gone now. He's no longer here. Let me think. About once a month, sometimes twice a month, I get an email from my class saying, so-and-so passed. Mike sat right next to me growing up in high school. Mike was right next to me growing up in high school. He's gone now. My friend Bill was at my wedding. He's gone now. Okay? I'm not guaranteed tomorrow. Okay? For me, long term is 30 days. Okay? If I'm going to do a trade, well, I'm going to do it for the next 5 days because I like to think I got 5 days. 30 days? I don't know. A year, 6 months? Don't know. So, yeah, 30 days. Okay, so who had that one? To see what Casey did today, it was pretty impressive. My apologies. Okay, I get what you're saying. You like Casey. A lot of young people like Casey. There's nothing wrong with that. Okay, Casey's paying out 100%. Well, they're a year and a half old. Not even a year and a half old. Okay, where is that money coming from? It's coming from new investors. At some point, someone's going to get the brown end of the stick. If it ain't you, it's going to be someone. I don't look at companies that don't have 2 decades of profitability. There's 10,066 different companies available. If it doesn't fit, well, there's 10,065 other companies that might. It's a simple thing. Casey's a year and a half old, at best. Why would I be looking at a company that's a year and a half old when I'm 61? I literally bought the stock 2 days ago and sold it today. Okay, absolutely nothing wrong with that. I just wanted you to look at Casey daily for fun. I know your principles. I meant no disrespect. Okay. Mindy, Procter & Gamble. I love Procter & Gamble. Okay. Now, haphazard, there's a huge difference between Procter & Gamble and Casey. Now, I understand Casey has a huge dividend, huge returns. I understand that. But number one, we all know it's not sustainable. It's great when you're receiving them, but you're receiving them knowing that it's not sustainable, knowing full well that somebody somewhere is getting screwed, because they are. No way you could possibly pay out 140%. No way. Okay? Now, Procter & Gamble, now they have a smaller dividend. They have a smaller yield. But they have what Casey doesn't have. Over 100 years proven track record. Okay? Now, I'm 61. Okay? Now, Casey may be the long shot, may be the hot dog, may be the top of the list, but It doesn't have historical performance. And terribly sorry. 61, I can't afford to be wrong. It's just a wild card. Yeah, no, thank you. That's not the game I want to play. Long-term investment. Yeah, my idea of long-term is 30 days. Okay, Mindy, Procter & Gamble. Wait a second. We're still on Nucor. Mindy, hold up. Let me finish up Nucor first. All right? Nucor, high of the year, 170. The low of the year, 98. Okay, we went from 160 to 170, down to 98, back up to 124. Okay, so the chart looks okay. Wonderful. If I'm going to jump into this one, what do the numbers look like? Well, if I'm buying it today, wait a minute, I already said I'm not doing this one. Now, here's the reason why I'm not doing this one. Now, some of you have been watching long enough, and I know I haven't touched on this in a long time because I didn't see it so blatantly flashed in front of my eyes. All right, let me briefly explain. You see the last trade right here? $124.68. That's the last trade of the day. Okay, you can't argue it all you want. That's the last trade of the day. So if that's the last trade of the day, the current bid and ask 118 to 121. The market maker is going to push this baby down tomorrow, so I'm not even going to bother with it because it's right there. The bid 118, the ask 121. Well, if the last trade of the day today was 124, market maker's pushing it down, so I'm not even worried about it. Laurie, they can't. Absolutely not sustainable. Playa, you're right. Long-term investment. Could you explain why only 3-day long-term view? Okay, Playa, I thought I just did that. I'm 61. I like weekly cash flow because I only have maybe 1 or 2 bills that come due once a year. All right, so if my money is not working for me every single week, okay, then my money's got to come from somewhere. So think about it. We're the only species on the planet that's got to pay to live here. At some point in time, when you retire, and you will, you either retire or you die before you get there. Okay, there's just the 2 options. That's it. You get to retire, enjoy life, or you die. That's it. The only species get to pay to live here. So where's that money coming from? But that's my opinion. You know, my opinion, long term for me is 30 days. The longest I've ever held anything is a year. Used to be 9 months, but now it's just a year. I was born in the 70s. I'm old school. And I have family in Boston. Oh, yeah? I was born and raised on C Street. Yeah, that was the projects. We moved out of the projects in 66. We moved to a small town called Marshfield, just south of Boston. Okay? If it ain't broke, don't fix it. If it's working fine, leave it alone. Simple strategy. Think about it. If it works, leave it alone. If it ain't broke, don't mess with it. Urban says it's bribery. It could be. I honestly don't know. I mean, I don't trust numbers that don't make sense. Just joined. User 8334. You were here last night. I think I called you Eric last night. NVIDIA. NVIDIA, okay. Answer me this. Riddle me this. Okay? Riddle me this. NVIDIA, what is it, 130 bucks, 140 bucks? NVDA. 140 bucks. $140 stock. Okay? This one's for you, Peter, NVIDIA. You ready? $140 stock. In your humble opinion, what kind of dividend do you think a company that has $143 stock should pay out? Think about that. It's an interesting question. Now, I'm going to wait here for the answer, and I'm going to go take a look at something. Okay, user 8334. Okay, I'm talking to you. 8334. You asked me what about NVIDIA. So, you ready? You asked me about NVIDIA, so now I'm asking you. NVIDIA, it's $143. $143 stock, what is a good dividend for a $143 stock? No? No comment on that one? So here's some of the issues I'm having with NVIDIA. Okay? NVIDIA has a one penny dividends, $143. $143 stock, it's paying a 1 penny dividend. But hold on, it actually gets worse. Okay, let's go to statistics. Okay, over here. So a lot of information you can get on Yahoo Finance, and it's free. You don't have to worry about it. Okay, NVIDIA. Okay. Do you see this right here? Revenue per share. Revenue per share. That's how much money they have coming in directly related to how many shares they have. Well, this is $6.06. That's revenue per share. It's a $143 stock. Why is the revenue $6.06? Hold on. It gets worse. We slide down a little bit further. Okay? We have a book value. Okay? We got a book value of $3.44. So think of this for a second. Let's say hypothetically you buy NVIDIA at $143. And the Supreme Court says you guys have to divest and pay off your investors. Well, guess what? At $143, okay? If the company went belly up and they sold off everything and they paid off the investors, you're getting $3.44 per share. Think about that. You're paying $143 per share, but if they liquidated and sold everything they own, you'd get $3.44. But let's not discount the 1 penny dividend. Okay, hold on. It actually gets worse. You ready for this? Let's go over to the summary, because we got more information on NVIDIA. Now, it boggles my mind why people don't read this information. Okay, now, you ready for this? Earnings date, no big deal. Earnings per share, $3.12. $3.12 per share. Okay, hold on. Forward dividend and yield. The dividend is 4 cents for the year. Look at the yield. The yield on NVIDIA, 0.03. It's not even 1%. It's not even 0.5%. It's 0.03%. So if you know anything about the rule of 72, okay, whatever interest rate you're getting, whatever yield you're getting, you divide it by 72, and that'll give you a rough idea of how many years it's going to take for you to double your money based on the dividend and the yield. Okay? That's absolutely freaking atrocious. But look at how many shares trade on an average day. 260 million. Okay, so you saw the numbers there. Well, let me show you another company, and you tell me what you think of that one. All right, let's go to statistics. Okay, we're going to look at statistics on a different company, and you tell me what you think. All right. Take a look at this. Revenue per share, $170 per share. Okay, so NVIDIA has $6 per share revenue. That means $6 for every share they have out there. Well, this company here has $175 revenue per share. They make a shitload more money per share. Okay, 175. But look at the book value. The book value, $66 per share. Well, look at the book value in NVIDIA. NVIDIA is $143. The book value is $3.44. The company's worth $3.44, yet you're willing to pay $143 per share. This one is worth $66 per share, and you're only paying $49 per share. Well, let's look at something else. NVIDIA. How old is NVIDIA? Hold on, that's an interesting question. Interesting question. All right, NVDA Incorporated. When? When was it founded? 1993. Okay, all right. So this company, $143 per share. It incorporated in 1993. Book value, $3.44 a share. Revenue per share, $6 per share. Incorporated in 93. So that's 32 years old, something like that. Now look at the other side. The other company that I showed you had $173 per share revenue. Book value, $66 per share. The actual stock price was $43 per share. So the other company is worth more, and it's over 100 years old. So the company too is over 100 years old, has a higher dividend, higher book value, lower stock price. NVIDIA, not even close. Okay, 93, it incorporated. 93, 03, 13, 23, 30, 32 years old. 32-year-old company, $143 a share, 1 penny dividend. Explain that to me in a minute, why you think NVIDIA is so damn good. Holy cow. That's it. We're basically done. I'm going to answer questions and that's it. Can you please pull up Casey's? Holy shit. Why do I always get people that are so passionate about the stupidest things? That ain't it. Here we go. CASY. Come on. Okay. Casey, $490 per share. Is that right? Casey's, yeah, Casey, $490 per share. Revenue per share. Is this the right one am I looking at? Book value, $92 per share. Huh. That's weird. CASY. Casey, General Force. Why the hell are we looking at that? That's a monthly. I don't do monthly. Why am I looking at it? 20 June, 18 July, 15 August, 21 November. I don't do monthlies. There you go. I don't do monthlies. Why am I looking at it? Yeah, I saw that big jump. So what do you think is going to happen tomorrow? Okay, more than likely, they'll have profit taking and that thing will drop. I'm not quite sure. What is you want me to look at? Yeah, it pays the penny. Haphazard, you're from Situate. Yeah. La Playa, 71. Cool beans. All righty. All right. What else we have? just joined. What about NVIDIA? NVIDIA, in my humble opinion, is a big lemon. Eric, oh, what about Dick's Sporting Goods? No, hasn't been around for 20 years. How are the protests going to affect the stock market? Don't know, don't care. I don't pay attention to that kind of stuff. Zion, interesting. Lisa, if I was you, I'd put on my website, I don't do IPOs. I don't do anything younger than 20 years. That's probably a good idea. Do I trade crypto? No, I do not. Pepsi, yes. NVIDIA, no. Jeffrey, sorry. Ahmad, hello. Cashmack, old realty. Really? So here you go. Here's your old realty. Look. 20 June, 18 July, 19 September, 19 December. Yeah, I don't do monthlies. The numbers just don't work. Okay, no to O. SoFi, same thing. No dividends, no thank you. Are you investing in which market? The U.S. market. Shift 4, Pepsi. We already looked at Pepsi earlier. Per actual, that's actually wrong. Uh-oh. Uh-oh. Per actual, that's actually wrong. Can you explain to me what's wrong? What are your rules for entry points? MOO. Market on open. That's it. That's my rule on entry. When I'm buying something, I buy it at the market on the open. That's it. I don't want to complicate things. I like things simple, safe, predictable, and consistent. I'm looking for 1%. Basically, I like pre-qualified dividend stocks. Those are companies that have consistently, listen closely, I'm going to say it slowly. I like companies that are consistently profitable for at least 20 years. 20 years, that's 2 decades. And have to have weekly options. Okay? No dividends, no thank you. No weekly options, no thank you. Simple. It's really not that difficult. YTAC, we'll have to take a look at it tomorrow. Never heard of it. On the Trader Rockway, Lost, BFK, blah, 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 blah. Can you explain reverse splits? Well, normal split is something like 2 shares for every 1 that you own, or 3 shares for every 1 that you own, 4 shares for every 1 that you already own. A reverse split is if you have 100 shares, well, your 100 shares goes to 1. So if you have 500 shares, you now have 5. That's a reverse split. Kind of sucks, because if you have, 500 shares and they do a reverse split, well, at 500 shares, you can do 5 contracts. But a reverse split, 100 to 1, well, now you have 5 shares. You can no longer do covered calls. EPD, no dividends. I mean, wait a minute. Yeah, I don't think EPD has dividends. What did I miss? All right, let's keep on going. Mux Capital. If you have to tell a person the same thing 3 times, you need to boot them out of the room. There are too many I like that answer, Mux. I do. Have you done, Schlumberger. Listen, Lisa, I haven't done Schlumberger today. I'll write it down. That'll be the first one we do tomorrow. SLB. I love Schlumberger. Hello, you pay attention, answer your tube. Oh, Dodie, how are you doing today? So, Dodie, I absolutely love it when people tell me how I should live my life. See, Dodie, what you're seeing me standing in front of the screen. But Dodie, what you're not seeing is the screen over there, the screen over there, screen over there, screen over there, screen over there, and the screen down here. My dear, you are not the only dancer on the dance floor, okay? Now, you may think your question is important. Well, there's about 1,000 other people here that probably think their question is important also. I can't read each and every one all at the same time. Now, I do answer each one individually, but You gotta wait till I get to it. Terribly sorry if you're impatient. How do you like SMR New Scale Power? Okay, John, I have no idea who they are. Okay, just in night. It doesn't matter what it did today. Look at the longevity of the company. Love that answer. Love it. It's a great answer. Okay, Pfizer. We already looked at Pfizer already. 1 week, absolutely. Pfizer, we already looked at that. Hey, everyone. Good evening. Good evening. Yes, it does. PWK, no idea what that means. Now, PWK 157. Yes, it does. I have no idea what that means, only because there are 7 different screens, and each screen has a dozen or more questions or a dozen or more comments. So, yes, it does. I'm not 100% sure what that means. Exactly. Look at the longevity. Casey, yep, got that one. EPD has dividends. There's a reason why I don't do EPD, and I don't quite know what it is. EPD, not off the top of my head. But I do know the name because people ask me about it all the time. 31 bucks. Historical data. Give it a second. Historical data. Here we go. Here we go. Yo. EPD. There we go. Historical data. Dividends only. All the dividends. 1998, 22, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5. Here we go. Okay, EPD, are you ready? 20 cents, 20 cents, 21, 21 and a half, 21.9, 22, 22.2, 22.6, 23, 23.4, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 43, 44, 45, 46, 49, 50, 51, 52, 53. Wow. So what is it about EPD I don't like? It's got to be something. EPD. Huh. Interesting. 31, 32, going for 17. That 32, okay. All right. All the bitching and moaning didn't really help any. The current price is 33. This week's 33 is going for 1 penny. Next week's 33 is going for 5 pennies. Okay, it's really irrelevant what this looks like, but this doesn't look that bad. Look, up, down, up, down. Now it's going up. It's at 31.95. So the 32s, but the ask price is 33. 33 just doesn't make sense to do EPD. Terribly sorry. Okay? I'm strictly a numbers guy. I'm not emotional about any company. None whatsoever. Either numbers make sense or they don't. It's actually that simple. It either makes sense or it don't. It's like when you go to the store to buy a new outfit, a new pair of shoes, a new dress, whatever it is you're looking for. It may look good, but if it doesn't fit, it doesn't matter how much you like it or how much it costs. If it doesn't fit, it doesn't fit. Haphazard, Laurie, you obviously haven't done your research. Oh, SMR is a play on power for AI. Alrighty then. I want to thank you. You got me finally to start with options. Well, bloody jolly good. Okay. Longevity of Casey. What's your opinion on the longevity of Casey? Oh boy. Okay. All right, so haphazard. I'm going to see if I can explain it to you one more time. Okay? Okay, so I'm going to show you slowly because apparently you're not listening. Okay? 20 June, 18 July, 15 August, 21 November. I'm not quite sure what it is about this you don't understand. Because 20 June, 18 July, 15 August, those are months of the year. Months of the year. 13 June, 20 June, 27 June, 3 July, 11 July, 18 July, 25 July. Those are weeks of the year. Months of the year? No. Weeks of the year? Yes. I honestly 100% appreciate your passion and your conviction. Good for you. I honestly do not give a flying dead rat's carcass about Casey. And I'm not quite sure. You know what? Have a nice day. Okay. Sorry, you guys. I had to block him. I'm just tired of that shit. FM, freaking magic. Cool beans. Stillman. That's not nice, Stillman. Okay? Stillman, if you don't have something nice to say, don't say anything at all. Next. He's disrupting the room. Thank you, Mux. Casey Taco Pizza, yeah. Dividends greater than earnings can be paid from retained earnings and cash on hand. Not a long-term sensible strategy, however. Okay, Robert, I do understand that. Explain to me how it's possible on a company that is 14 months old. 14 months. Okay. Now, I understand companies have 10, 20, 30, 40, 50, 60 years. I understand that part. Explain to me about a company that's only 13 to 14 months old. How can they pay out 140%? Okay, we looked at Verizon earlier, Doodle Daddy. Mux Capital, Robert, on borrowed money. Yeah, that's never a good thing. So you are saying don't buy green bananas. I didn't say that at all. And I never buy green bananas. Amy, how are you? Love your TikToks. Thanks for all you do. Keep it up. Thank you. Nick Gardner, how are you today? Who's your number one go-to for dividends? Oh, Nick, it changes every year. So this year it's U.S. Steel. Last year it was Macy's and Walgreens. The year before that it was Ford and General Motors. Well, it changes every year. Don't ask me why it changes every year. It's just for some strange reason, some companies have better dividends, better premiums on a consistent basis. Now, we don't trade Walgreens anymore because since they got bought out or since they're in talks of being bought out, well, the premiums are absolutely horrible. So I don't do them anymore. Same thing with Energy Transfer and AGNC. Well, the company may be good, but whoever's in charge of the options and the premiums, they're just pricing them to a point where it's just not worth it. Okay, so let's keep on keeping on. You can't hurry love, you just have to wait. They say love don't come easy. It's a game of give and take. Wait. You can't hurry love, oh, you just have to wait. Just trust in a good times, no matter how long it takes. I'll brighten. Love that song. It's a game of give and take. Okay, who pays weekly dividends? Okay, so Nick Gardner, I'm kind of curious, when have you ever heard me say weekly dividends? Because I've never said anyone pays weekly dividends, as far as I know. Okay, as far as I know, I've never said who pays weekly dividends. Okay, what I said is dividend investing for weekly cash flow. So changing the words or changing the The syntax, that's right, the order in which the words show up, the syntax. Well, it changes the meaning. I never once said any company paid weekly dividends. Now, there's a whole bunch of companies that have weekly options. So I'm looking at dividend stocks that have weekly options. All right. All right. Let's keep on going. Born on C Street. You're crippin'. Yeah. Well, C Street back in the 70s. Wait a minute, sorry. C Street back in the 60s was projects. And there was like 6 or 7 of us living in a 2-bedroom apartment. It was interesting. Don't get me wrong. It was fun as a kid because there was 5 of me, my little brothers and sisters. And then my mother's best friend had 5 kids also. So can you imagine it? 2 parents, you have mom and dad, and then mom and dad. So that's 4 parents and 10 kids in a 2-bedroom, 1-bath apartment in the projects in the 60s. Yeah. Huh. Yeah, well, we moved out of that. Anyway. What stocks are you talking about? Mike Sweeney, can you explain how you roll over from week to week if you lose? Well, if you might lose. See, Mike, I appreciate the comment. I do. But if you might lose. All right, so what I do is I buy on a Monday. I sell the option on a Monday. So like Monday at 9:30, the market opens. So my orders are always at the market open. I buy my stock and I sell my option all at the exact same time. So you can look at the timestamps. Most of them say 9:30:01 or 9:30:02 or 03. So I'm jumping in first thing in the morning. So Wednesday, Thursday, Friday, after the stock moves for a couple of days, we take a look at it. And then we ask ourselves a couple of questions. 1, what did I buy it for? 2, what option did I sell against it? 3, where's it at now? 4, what does all that mean? 5, what do I do so I don't lose any money and consistently have money come in? Okay, those are the questions I ask on a Thursday, Friday afternoon. Depending on, that's why every single morning we have a morning trading group. Every morning we take a look at our positions. Okay, so I look at my positions and I share all my positions and people ask me about my stuff. And every once in a while, somebody will share their screen and then we take a look at their positions and explain, well, this is what's happening. This is what you could do. What do you want to do? Okay, so I'm not quite sure how you put a value on that. But that's one of the services that we have. Now, you've never heard me, and you probably never will hear me try to sell anything, and I'm not going to have a pitch at the end of the night. Okay? You all know how it works. Up in my bio, you want to do some more research on me. Who's this guy? What is he talking about? What does it mean? Well, also up there, you have my email address. You have my websites. You have all my social media. Okay, you have the books that I've written, the courses that I have. I'm not trying to sell you anything. I'm just sharing information. It's there for the asking. Playa! Good night on my way to work at the hospital, and it's a full moon. Oh, that's where the weirdos are coming from. So anyway, Mike Sweeney. To roll a position forward, you have to buy back the current option and then sell either next week or the week after or the week after. However, see, when you're rolling a position forward, there's a lot of moving parts. Okay, you get the stock, you get the options, and then you got to buy back one and sell another. Well, it all takes place. A plus B equals C. Everything else is A plus B equals C. Okay, so you actually got to walk through it once in a while for you to understand it. CRWV. What the hell is that? Interesting. I'm going to say no. Okay? Because here's your high right here, 165. Well, the stock is coming down from the high. Okay? Today's lower than yesterday. Yesterday is lower than Wednesday. Thursday's lower. Friday's lower. So is it coming down? So terribly sorry. Oh. Push. It says that or trader. That or trader. I have no idea. Yeah, the 10-minute trader. Okay. Try to read backwards is hard. Oh, well, if you go to TikTok, everything's normal. See, the interesting thing, okay, YouTube, which is you're on right now, doesn't have the ability to invert the camera so that everything looks normal. But TikTok, everything's normal. It's just YouTube doesn't do that. Okay, let's keep on moving along. Thanks, you're welcome. Bum, 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 bum. Yep. Bum, bum, bum. 81 thoughts on CRWV. Yeah, CRWV is right there. Okay? It went up. That was up. It's up at the high. I don't buy in that high area. Cash Mac, NVIDIA crazy earnings, acceleration, good growth, movement stock, horrible dividend stock. Yeah, horrible dividend stock. Okay, we're here looking for income. I'm looking for income. I'm not looking for capital growth. So yeah, NVIDIA is a capital growth company. Totally different than what we're looking at. How many more questions do I have? That's a better dividend stock to NVIDIA then. Oh, I'm terribly sorry, dude. There's so many of them. Altria is one. I'm not going to say Realty. In percentage, how much on average does your strategy yield annually on average? Over 50% on average. Avatar. Zion, let's take a look at that one tomorrow. NVIDIA, yeah. An alternative stock to NVIDIA. You got a pencil, piece of paper handy? T, you ready? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Those 5 lists right there will give you 300 different companies that, in my opinion, are embedded than NVIDIA for cash flow. YouTube tech support, urgent notice. Your account has been flagged for suspicious activity. The stream will be shut down immediately if you are temporarily banned pending review. Please contact support. Uh-oh. Well, how do I contact support? Banned. My video is going to be banned. Wow, I have 1,000 videos on YouTube, and they're saying this one's going to be banned. How bullish are you on Tesla? I'm not. Tesla doesn't have dividends either. All right, Tommy Demore, the information you're sharing must have said something. Pissed someone off. Hello from upper state New Hampshire. Ooh, oh, upstate New York. Oh, I love upstate New York. I was looking years ago, many, many years ago, I was looking at a mansion. So literally a mansion. I think it had 17,000 square feet. Okay. Has its own elevator and it has its own power plant. Okay. And I think it came with 20 acres. It's a cool place. Huge. Looked like kind of like a castle. And I think the guy only wanted like 400 grand for it 20 years. I think it was, yeah, about 20 years ago. And then there was another one. Oh, another one. It was like 8,000 square feet, and they only wanted $20,000 for it. This is about 20 years ago also. 4 floors, full walk-in basement. It had a crawl space for the attic. But it was right in town. So you could walk to all the stores. But it was, they call it a 4x4. So as soon as you walk in, you got, 4 rooms on the first floor, 4 rooms on the second floor, and 4 rooms on the third floor. So yeah, I love upstate New York. Beautiful houses. Had been longer than that? No way, 20 years ago. Tommy Demore. Had be longer than that? No way, 20 years ago. Okay, Tommy, what are we talking about? The information you're sharing must have said something. Had been longer than that? No way, 20 years ago. Okay. Arrow, can you explain what you do to make that 1% per week? Huh. They use IPO money to pay out 140%. Yeah, Max Capital, that's exactly what they do. They're using money to come in order to pay that 140%. Yeah, I know where it's coming from. It's not sustainable. I know that. Two unrelated comments, sir. Okay. Thank you for that, Tommy. All right, so let's keep on keeping on. Stephen, good evening. Camden, good evening. Mara, thank you. Thank my later. Okay. I can't read that. Jimmy Ape Kitty. Okay, Jimmy Ape Kitty. Okay. Mara, thank me later. Yeah, we've already looked at Mara early today. Was thinking about buying JEPQ. Uh-oh. All right, Stephen, you're relatively new here. I don't think you quite understand what it is I do. I buy dividend stocks for a simple, safe, predictable 1% per week. If you take a look at the numbers for JEPQ, well, number one, it's an ETF. It's nothing but a bunch of stocks that they put together to come up with a rate of return. Fine, wonderful. Take a look at the dividends that they pay out on a consistent basis. Is it consistently increasing? Does it have longevity that goes along with it? Okay, now the stock market's been around for 400 years. I'm looking for companies that have 20 years of profitability. JEPQ is not quite there yet, but it's good for people who don't want to do it and have plenty of money where the returns that they give you, you can sustain from. Now, from what I have, if I was going to give it to a money manager or a fund manager and they were going to pay me out, Capri wants to know what a dividend is. Yeah, hold that thought, Capri. I'm going to get to that in a second. As I was saying, JEPQ, if you look at how consistently have they increased their dividends for how many years, and have it consistently increase year after year after year. So just because a company looks good for the 30 days that you're looking at it, well, what does the history look like? Now, who's running the company? How is the performance? Are they consistently profitable? It's a yes, no question. So you have companies that are 100, maybe 200 years old, still here in the United States, and they still increase their profits every year. Well, to me, that makes sense. Now, JEPQ is not really a stock, it's an ETF. It's a bunch of stocks thrown together. You either like it or you don't. You're either okay with the amount of money they pay you out or they don't. So I get 1% a week because 1% a week pays all my bills. If I didn't get 1% a week, if I gave all my money to a money manager, I say, oh, great, you give me what you think I earn. Well, most people get 8, maybe 10% per year. Now, if I was getting 8 or 10% per year, I would have to go back to work in order to pay my bills. Well, I'm perfectly happy trading my own money and consistently making a decent profit. Because if you look, I don't hide anything. You can look at my information, go to the bio, check out who I am, check out my website, check out my name, and then do a deep dive search. I've been doing this since 2011. So I have a lot of content out there. On YouTube alone, I have over 1,000 videos of me standing here and say, hey, yeah. Okay, so I do what I do because it works. Now, I don't pretend it's going to work for everyone because we are all different. You have different obligations than I do. You probably have a certain amount of money. Well, I have a certain amount of money. Well, what's the difference between the two? Okay, what kind of risk factors do you have as opposed to what are my risk factors? Now, I'm 61. If I'm wrong and if I lose money, I have to go back to work, back into the workforce. Well, I've been working since 1973. We're in 2025. That's a long ass time to be working. I'm kind of tired of working. I kind of enjoy sleeping until I'm done. Going and hanging out with my 5-year-old grandson, trying to figure out what the hell is he saying. How do you keep up with a 5-year-old? Especially when you're in your 60s. So it's different for everyone. This is not one size fits all. And it's just the money. because you have other issues in life that you need to worry about. Contribution, religion, family, education, lots of other stuff in your life other than just the money. So the money thing is just a small portion. Figure it out. It's not that difficult. Oh, okay. G me ape kitty. You love JEPQ and JEPY. Nothing wrong with that at all. I don't like either one of them. But then again, I'm looking for something different. Okay? I'm looking for 1% every week. Okay, you guys are looking for something totally different. Ooh, that one's done. Casey Roman, how are you? Eric, if stock runs up, do you sell stock, take the profits, or place another covered call? It's always, always, always going to be about the numbers. What am I paying for it? What am I selling it for? What am I collecting? All these go together. So Capri, what is a dividend? All righty. Let me see if I can explain this to you in a manner in which you'll understand. All right, you ready? Capri. A dividend is a portion of the company's profits that they give back to the investors. So let's say this way. Let's say hypothetically, I start a business and I make widgets. Okay, and I make so many widgets that I need more money in order to make more widgets to sell to more people. So I borrow money. Okay, when you borrow money, you got to give something for that borrowed money. Great. So you lend me money, I do my business, and I pay you back your money with a portion of my profits. So if I make money, when you give me your money, well, then you are entitled to some of my profits. That is in a form of a dividend. So I take my profits and I divide it out to all the other people who lent me money. I divvy it out. Dividends. Okay, so a dividend is a portion of the profits that the company gives back to the investors. Okay, so you have two different companies. Okay, one company will take all the profits, put it back into the company for the company to grow faster. Now, you have other companies that, well, they've been around for 50 to 100 years. Well, they don't need to grow. They take their profits and they share them with the investors. Dividends, okay? The profits that they share with the investors are called dividends. Okay, hopefully that worked out for you. Laurel Wynn, do you buy back your covered calls after 70% time decay or hold to expiration? Do you avoid covered calls on weeks with an EX dividend or distribution date? That's an awesome question. That is the best question of the night. Seriously, it is. Now, I'm going to say something and hopefully you get it the first time. All right? I trade every day, okay? I wake up in the morning, brush my teeth, get some breakfast, turn my computers on, and for my own personal accounts, it takes me 5, maybe 10 minutes. What I'm looking for specifically. Are you ready? What did I buy it at? What strike price did I sell? Where is it at now? What does that mean? That's it. It's always, always, always going to be about the numbers. What did I pay for it? What did I sell for it? What kind of rate of return did I get? Where's it at now? And what does it mean? Okay? So once I figure out this, and this, well, next question is, what do I do now? Do I roll it forward? Do I let it expire? Do I dollar cost average? See, there's a lot of different answers to the question of what do I do now? But we can't figure that out until most likely Friday afternoon. So Monday, Tuesday, Wednesday, Thursday at 9 a.m., our little trading group, we get together on a Zoom call and we say, all right, well, we got this stock, this stock, this stock, this stocks. What did I buy it for? Where's it at now? What are we doing? Okay, great. Next stock. What do I buy it for? Where's it at now? This, okay. What do I do next? Great. Friday, we don't jump on at 9 a.m. We jump on at 2:30. And the reason we jump on at 2:30, all options expire on Saturday, but you can't do anything after 3:59 p.m. on Friday afternoon. So anything and everything that we got, so we're basically closing up shop. We're sweeping the floors, dumping the trash, locking the doors until Monday. Basically, we're tidying up the week. What did we buy it for? What did we sell? What's it at now? What should we do next? We do that all before the market closes on Friday afternoon. But we do look on Tuesday, Wednesday, and Thursday. We do a lot of buying on Monday because that's where you get the most value on Monday morning. Okay, most value. Tuesday, Wednesday, and Thursday, we're just looking at it, babysitting, if that's what you want to call it. What did I buy it for? Where is it at now? What does it mean? What should I do next? It's always going to be about the numbers. But that's a great question, though. It really is. SpongeBob SquarePants, who lives in a pineapple under the sea. Porous and yellow is he. Wait a minute. Absorbent. Porous and yellow, absorbent is he. Okay. Robert, for the 3 accounts you discussed, here do you use only buy right option strategies and add in other option strategies as well? Well, here, live, I only do one strategy. Okay, the paid morning group, for those who pay for that service, well, we do other trading strategies. Okay, some of them I won't do because they're too complex for beginners. Okay, so you have the beginner traders. So think of it this way. The trading strategy I'm using here, it's simple, it's safe, it's predictable, it's consistent. Okay? If you do it right, 1% a week comes to 50% per year. Do you really need more than 50% per year? Think about it. Everybody's greedy, everybody wants more. But here's the thing, wanting more and getting more are two different things. Because if 10 or 15 minutes a day equals 1%, which is 50% at the end of the year, how much time and effort do you have to put in to get 2 or 3% per week? And then you got to figure out, how do I balance my time and money? Because one thing you can never, ever, ever get more of is your time. Money comes and goes. There's plenty of money out there. But what you can never buy back is your time. So for me, 5, 10, 15 minutes, I make my 1%. Great, I want to go on with my day. Whether I watch the squirrels playing in the trees or I watch the grass grow is irrelevant. It's my time. I can spend it any way I want. I do not, and I did this many years ago, sit in front of my computer and no, I don't do that anymore. Sal, good evening, and how are you today? Ramble, hello. What's your thoughts on Misty? Yeah, no, thank you. WTF, did I scroll to? Yummer, how are you doing? Get off that crystal UNC. I have no idea what that means, but okay, thank you, Yummer. Rambler, what's the criteria to be a level 3 investor with Schwab? What level investor are you? I am level 1 with Schwab. Is that all I need? Yeah, level 1 is fine because level 1 allows you to do option trading, only covered calls and safe option trading. That's it. Safe option trading. Okay. Now they've changed the ranking since I've joined. Okay. I used to be level 5, but now I'm level 3 because they no longer have a level 4 and a level 5. See, I can write uncovered puts. I can write naked puts. I can write naked. I can do almost anything because I've been doing it for so long. Okay. If a stock runs up, do you still take? Okay, I already did that question. I think that's it. That is it. There's no more questions here. MCPK510, MO, Altria. Love Altria. Okay, but we're at 11:59. I'm usually done at 11:30. Hey, player, you're still here. I thought you were leaving. What's your goal? LG Good Vibes. My goal? Simple, safe, predictable, consistent 1% per week, consistently with least amount of aggravation. Okay, Rambler, just curious. What's the most dangerous stock that has options? Would that be Tesla? I honestly couldn't tell you. That's not the way I look at things. Evil Rabbit. Stock's boring. Crypto is where the excitement lies. It's absolutely beautiful assets to trade, great volatility and transparency. Evil Rabbit, that is awesome. But I tell you what, there's no historical performance, there's no safety, there's no regulations, and there's no possible way on God's green earth that you can get a simple, safe, predictable, consistent 1% per week without having to sit in front of your computer all day long. Okay? I'm 61. I don't have the luxury of being wrong. Okay? There's way too many cryptocurrencies that disappeared, went belly up, people got screwed. Sorry, it's like the Wild West, not someplace I want to play. Now, for your younger generation, it's great. There is regulations on crypto. Not the regulations that I'm looking for. Okay? Try ODTs if you need adrenaline. Yeah, I don't do that either. Okay. Ramble, do you go more in depth of 1% risk? Are you trying to get 1% to pay your monthly expenses? Well, absolutely. Now, see, Rambler, when you retire, you got two options. Only two options. That's it. And don't kid yourself thinking that you got more than two. Number one, you take control of your own money and you invest it yourself. That's number one. Number two, you let someone else do it and you give up accountability and you quit bitching and moaning. That's it. Two choices. Do it yourself, give it to someone else. That's it. Now, if I've given my money to someone else, I'm relying on them to take control of my money. But I'm pretty damn sure I have more concern for my money than that person does. Because nobody has more interest in your money than you. So why would you give up accountability and why would you give up responsibility to someone else who doesn't have your best interest in mind? Now, some people got enough money where it's not that big a deal. Now, if you have millions upon millions upon millions, well, 4% a year is perfectly fine. Well, for me, that's not fine. 1% a week, well, that's fine for me. Okay? If it works, leave it alone. If it ain't broke, don't try to fix it. So 1% a week works perfectly fine for me. All I'm doing is just sharing what I do. Okay? I don't expect you to jump onto my train. No. I'm creating this video log for my children and my grandchildren so that I'm gone. They can take a look and say, well, what happens if this happens? Well, you got to go to episode this and do that and that. And he explains it all. Well, that's what I'm doing. I'm creating a video log for my children and my grandchildren. So when they are older, they'll have all access to this information. At this moment in time, I have over 1,000 videos for them to go through. So it's just information that I'm passing along. Okay, what do we else have next? Try ODTs if you need. Yeah, I don't do ODTs. There is regulation on crypto. Not the kind I'm looking for. I mean, trade top 10s, not the new ones. Yeah, I get that. But silly thing, Evil Rabbit. Okay? There are no options. So how, I'll ask you again. Okay? How do I get a safe, predictable, consistent return on a weekly basis without having to sit in front of my computer looking at charts all day? As far as I know, you can't do that with cryptocurrency. You have to actually sit in front of your computer and look for breakouts, head and shoulders, ascending pennant, descending pennants. No, thank you. I did that many years ago. I have no desire to do that anymore. So Cryptocurrency is great for the younger generation or for the older folks that say, yeah, let me buy it and see what it does. You understand? No, I appreciate that you understand that. Thank you. Crypto got options. Not that I know of. Okay, I don't think crypto has weekly options. All right, here we go. Let's look at this. Okay, let's go here. Let's go here. Let's ask old Google, does crypto have weekly options? Well, imagine that. I stand corrected. Crypto has weekly options. Several exchanges offer weekly option contracts on major cryptocurrencies like Bitcoin, Ethereum. These options provide a way to manage short-term exposure and price risks throughout the week. Here's a more detailed look. Weekly options. Holy shit. Okay. Weekly options have expiration date that fall on specific days of the week, Monday, Wednesday, Friday. Exchanges, platforms like CME Group offer micro Bitcoin and micro Ethereum options with both monthly and weekly expirations. Weekly options allow traders to react to short-term market movements and economic movements quickly. Flexibility, they offer a great, oh, cool. Now, I have no idea because I didn't pay attention to cryptocurrency. Well, this is a new scenario. So I'm going to have to check into that. Not that I'm going to abandon ship. Turn your front-facing camera on so it will mirror what we are being showed. Yeah, I didn't mean it disrespectfully. Thank you for that. We just educated you. Yeah, you did. You have no idea what is going on in the crypto world. We just educated you. All right, great. Mr. Who is damn, we gotta stay respectful. Thank you kindly. Turn on your front-facing camera. That means I have to turn my camera around and I won't be able to see. If I turn my camera around, I won't be able to see the questions that you're asking. Okay? What's your opinion on price scalping stocks daily? Great. Not something I do, but still, some people do that. Yes, I didn't mean to be disrespectful. Thank you very much. Yes, agreed. Just do what works for you. Good luck. Thank you. I meant it in a way that he really doesn't know about crypto. And I explained, and I agreed 100%. I don't know about crypto. But what I do know about crypto, see, I honestly did not know crypto had weekly options. Because as far as I knew, there were no weekly options on crypto. So now that I do know, maybe I will take a look at it. What's your opinion on Elliott wave theory? I like the Elliott wave theory. I don't use it. Okay. The strategy that I use, which you're new here, the strategy I used was created for my 9-year-old daughter. Okay. In 2008, she jumped on my lap and said, Daddy, what are you doing? Can you teach me? So imagine that. Your 9-year-old little girl jumps on your lap saying, Daddy, can you explain to me what you're doing and can you teach me? Okay. So that's how this whole thing started. When my 9-year-old was curious about what I was doing and she wanted to learn. So to teach a 9-year-old, it had to be simple, safe, predictable, consistent, and no way for her to lose. So to figure that out, we needed 5 things. Rule 1, number 1, never buy something you don't understand. I don't understand crypto, so I don't buy it. Rule number 2, never sell at a loss. It defeats the purpose. Rule number 3, make sure the company is consistently profitable. Rule number 4, you're going to like this one, weekly options only. And rule number 5, make sure the numbers work. So the interesting thing about the difference between cryptocurrency and dividend stocks is dividend stocks are predictable. And I know exactly when they're going to move based on historical performance, which is something that cryptocurrency doesn't have. So I like to have all the odds and probabilities in my favor so that I can be consistently profitable. Yes, crypto is exciting stuff for the younger generation. Really efficient and nice exchanges, low fees, decentralized finance is amazing. If you want, you can take a look projects like Curve Finance. Agreed. Now, don't get me wrong, it sounds enticing. It does. But for me to invest my money into crypto, I need to know a little bit more about, hold on, predictability. Now, from what I understand, crypto is a lot like the Forex, which is directly related to news. So something happens in the news, and then Forex moves. Other than that, you got to sit there and watch it all day long. I have no desire to do that. So just because crypto has weekly options available, well, do cryptocurrencies move predictably? Now, I'll give you for instance. Now, you probably get this right off the top of your head, okay? And you don't have to understand the stock market to get this. It's so simple. Now, there's a stock called Weight Watchers. It's a diet stock. So why does this stock go up every single year in the beginning of January? Why do you think that is? New Year's resolutions and people jumping on the board wanting to lose weight. New Year's resolution, it happens every single year. That, my friend, is predictable. Also, yep, you got that right. Also, certain stocks move just before Black Friday. Okay, the Friday after Thanksgiving. They move predictably. Does cryptocurrency move predictably for any reason whatsoever? Not that I know of. Okay, nobody buys cryptocurrency to lose weight. Nobody buys cryptocurrency because the kids are off of school. Okay, now oil stocks move up in April and May. Well, there's a reason why oil stocks go up in April and May. Because you can buy oil any time of the year, 12 months of the year, anytime you can buy oil, heating oil, okay, to heat your house. But here's the thing, okay? Everybody in the northern country where it gets cold turns their heaters on at the same time, November, December, January. So what happens in February? Okay, November, December, January, and February, you're using up all that oil in your tanks. So what happens in March and April? You have to refill. Everybody's refilling in March and April. Nobody fills up in June, July, because who the hell wants to buy heating oil in June or July? But certain stocks move predictably year after year after year. And dividend stocks are those companies that move predictably. Okay, so I think you really like that lettering, okay, whatever font that is, but it's nothing but irritating because it doesn't make any sense to me. Okay, narrow? Yes, cryptocurrency is volatile. Yeah, I get that. Everyone has parasites. You have too. Dude has worms. I'm not quite sure what the hell that means. New Year's resolutions. Yeah, you understand. Yep, you got it? Okay, cool. Okay, so narrow. I have no idea what any of that means. All right, and it is past 11:30. All right, is this open to Canadians and Americans, or is this just only things if you don't mind me asking? All right, LB, good vibes. The only challenge you're going to have being in Canada is you need to open a U.S., as far as I understand, a U.S. stock account. Pretty sure. Network withdrawal fees apply. Varies by tokens. Yep, got that one. Who is Damn Sam? All right. Also, I wanted to tell people not to participate in the riots this week, June 14th. Bitcoin will rise and fall further. Yeah, it always does. Okay? It's going to go up, it's going to go down. Eventually, something's got to give. Now, I love the idea of cryptocurrency. It's an awesome idea. Get the greedy little politicians and the greedy little bankers' fingers out of your pockets. That's a great idea. But how do you keep everyone else out? All right, my favorite stock this year at this moment in time would be U.S. Steel. It's the one I made the most money on so far this year. Last year, it was Walgreens and not Nordstrom's. I don't remember. What's happening in downtown LA? Don't know. I don't live there. What happens? You tell Bitcoin again, come to 5,000. I have no idea what that means. All right. It's past 11:30. You guys have a great night. We'll do this again tomorrow. Macy's was my number one stock 3 years ago. Not this year, not last year. All right, so you guys have a great night, and we'll see you again tomorrow. All right, have a great night, everyone.